All right, real life traders and prospective real life traders, thank you so much for being here on this Sunday, early morning or mid morning, depending on where you are. Welcome to the Backtrading Strategy webinar presented by Real Life Trading UK and Europe. My name is Joshua Banner. I'm one of the administrators and one of the hosts of our daily rooms at Real Life Trading UK, and I want to welcome you to this webinar on backtrading and strategy. We hope that you find this webinar educational and that you also learn some interesting new trading strategies and how to hone them to test their edge. Thank you for being here. Let's get started. So just before we begin, quick disclaimer, of course, please keep in mind that everything that we'll be talking about today is for educational purposes and is not financial advice. We do recommend that you please take a moment to read the full disclaimer, but in the interim, I will read some of the more important parts. We advise you, as always, to use extreme caution when placing any investment, whether equities, options, real estate, in any form, in any kind, and in any country. All investments carry inherent risk. And of course, risk should be known and calculated beforehand by the individual, you, the viewer, the participant, before making any decisions or before making an investment. And keep in mind that all investments are made under your own knowledge and the own power of each individual person. This webinar is intended to be educational and to not make specific financial recommendations. All content and classes are for educational purposes and not financial advice. Any examples and analysis are intended for the purposes of education, should not be considered for advice related to investments, and customers should consider all relevant risk factors before investing. Keep in mind that any different type of asset class, options, currencies, equities, futures, or real estate may not be suitable for every type of investor. Thank you so much for being here. So let's talk a little bit about who we are. As I mentioned, my name is Joshua Banner. We are part of the Real Life Trading team at UK and Europe. Some of you may be familiar with reallifetrading.com, founded by Mr. Jeremy Newsom, down here, the man in the suit with the beard. And what is our mission statement? Well, we're a collective group of individuals from various backgrounds who have come together with one mission in mind, and that is to enrich lives with mentally liberating financial education. We're an established community of profitable part-time and full-time traders. We come from all across the globe, many different segments. We have a global network. And our RLT members, as we call them, they use the lifelong skill of learning how to trade and learning how to invest in order to make extra income, pay off debt, invest in their future, and ultimately achieve financial independence. And now that wonderful education, most of which is entirely free, as we'll talk about later in this webinar, is available to you globally, worldwide, and we're making a push into Europe and into the UK, and we hope that you will be joining us on our Slack channels and our Discord channels after today's webinar for even more information, collaboration, and a fantastic support network. These are today's speakers. Let's talk a little bit about who will be joining us. As mentioned, my name is Joshua Banner. I'm one of the administrators and founders of Real Life Trading UK and Europe. For approximately 10 years prior to working with Real Life Trading, I was a tech entrepreneur. I was the CEO of a large Amazon business, and I eventually moved into trading and investing after wrapping up that business and decided that I wanted to focus on financial independence, on controlling my time, then to focus on learning how to make money. So I developed a a moving average swing trade strategy that is very profitable and simple. And we'll talk about that as well as some other strategies today. After myself, we'll have Mr. Dean Bradshaw. Dean is an M&A entrepreneur with a focus on longer-term investments and fundamentals. I host our Tuesday tech analysis room, and Dean hosts our Monday fundamentals room. Dean also likes to trade options for cash flow, and he'll be talking today about a very interesting in-house strategy called the MOMO. Joey's the head of our Forex crew. He's a teacher, a coach, and he does focus mostly on Forex and trading currencies. And he uses a very simple and powerful technical analysis-based trend following system to extract consistent profits from the market. And he'll be talking about that strategy today. Dr. H is our resident options expert, and Joey is the host of Forex Fridays. Dr. H hosts our Wednesday live room. He is a math whiz and a researcher with a focus on advanced options and trading high probability trap setups. Dr. H today will be discussing hammer strategies and hammer breakout strategies. And finally, make sure that you're staying all the way through the end to hear from Doc Martin, a actual real NHS surgeon by day and algo trader by night. Doc loves harnessing the power of machines to give himself an edge. He is our resident algorithmic expert. He is the host of our Thursday Algo Clinic. And thank you for being here. Please make sure that you stay tuned for all of our speakers, because in fact, after we'll be having a really fantastic offer for those of you that are interested in joining real life trading. Let's talk a little bit about today's topic. As you know, the topic of this webinar is backtrading and strategy. And what we're looking to do is test the durability of different strategies on multiple time frames. In episode 1 of this webinar, we'll be focused on introducing to you some important and profitable strategies, in-house proprietary strategies, as well as some of the most popular trading strategies that are in the community. And we'll be talking about those strategies, the conditions of those strategies, and we'll be backtesting those strategies to see how they hold up on different time frames and in different situations. This episode 1 will be more of just an introduction to these strategies and some initial back trading. And we hope you'll join us for future webinars where we'll take more advanced steps to really hone the edge of these strategies as well as others, and see how they do in different market conditions. Some of the popular strategies that we'll be talking about today are based on moving averages, or EMAs, exponential moving averages, hammer strategies and hammer breakouts for hammer candles, as well as momentum-based strategies, or as we refer to it in-house, the MOMO, as well as a few others. And as I mentioned before, please stay tuned to the end. There'll be a couple fantastic offers for you to join real life trading UK and Europe. Before we get going, I just want to say a really big thanks to our initial partnership sponsor here, Audacity Capital. Audacity Capital is has a world-renowned reputation for funding profitable traders. If you have talent and know-how, Audacity Capital can provide you with funding. Yes, that's right. You will not need to trade your own funds. Audacity Capital does fund traders. They're looking for successful traders who are ambitious with a proven trading strategy and are looking to go to the next level. Check out the Funded Trader program at Audacity Capital. You can see here we have a 10% off referral link that's available to you, and we'll be sending out these slides as well for those of you that are interested in learning more about Audacity Capital. It's an apply-only program, and if you are selected, they can provide you a trading account initially up to $15,000 to begin trading currency and Forex with. They have a 50-50 profit split. You're not liable for any of your losses. They have a trading support network, and every time that you make 10% profit, they will double the value of your account and provide you more funds to trade with and more funds for you to take that 50-50 profit split. To be considered for the program, you need to demonstrate that you know how to manage risk, that you know how to manage leverage consistently, that you can keep your account drawdowns less than 10%, and that you demonstrate that you are a profitable trader. There's a one-time joining fee of £199 and a monthly platform fee of £99, which helps cover the cost of the institutional liquidity provider. Audacity Capital works directly with institutional providers so that you have very tight spreads and predictable spreads so that your profits can be more predictable. And don't forget to use the link in today's webinar for 10% off and learn more about Audacity Capital. Additionally, we have a partnership sponsor, 24/7 Wall Street. Please check out www.247wallstreet.com. 24/7 Wall Street is a popular US-based LLC which runs a financial news and opinion company with content delivered all across the internet. A fantastic resource for information about the market and finance in general. The company's articles are republished on many news sites across the internet, some of the largest sites and portals, including MSN, MarketWatch, USA Today, AOL, many newspaper and broadcast sites all over the US and the world. The company publishes over 30 articles per day and has readers throughout North America, Asia, the Middle East, and Africa. Make sure to check out www.247wallstreet.com. That's 247wallst.com as your first stop when researching the day's investing news and beyond. Thank you so much, Audacity Capital and 24/7 for sponsoring this webinar and allowing us to provide this wonderful free education to all our real-life traders and our viewers. This is today's agenda. For those of you who might want to take a screenshot of this so you can plan accordingly. We'll be having a little bit of an introduction, continuing as we are at the moment, and talking about today's topics and speakers. Then we'll kick it off first. I'll be speaking about the 10 EMA day trading strategy. We'll have a 30-minute session and 10-minute Q&A after for each of our presenters, myself included, and a 10-minute break between each presenter for everyone to get up, to have a bathroom break, grab a snack, stretch a little bit, keep the blood flow moving. We'll be here for about 3 or 4 hours today, depending on what time you're joining us. And I hope you will stay to the end and for our final Q&A and all our fantastic offers. Our second presenter, Mr. Dean Bradshaw, will be talking about the MOMO, a momentum-based in-house strategy. After that, we'll have Coach Joey Malone talking about his Forex strategy and trend breakouts. Next, Dr. H will talk about his hammer breakout strategy. And finally, Doc Martin will be talking about trading long tail candles using algorithmic assisted tools. After that, we'll have a wrap up and a final Q&A. If you have questions for the presenters while they're speaking, please do add them into the chat, whether on YouTube or on Zoom, and we'll make sure to get those questions answered by the presenters. Thank you, everyone, of course, for being here and for joining us. Let's get started. As I mentioned, my name is Joshua Banner. I'm one of the co-founders of Real Life Trading UK. I was born and raised in South Florida. I split my time now between Florida and Spain. I'm an entrepreneur and a tech CEO, as I mentioned, for approximately 10 years now. I was a large Amazon third-party seller. I'm mainly a position and swing trader, but I recently have begun to just love selling covered calls. And if you're the type of trader who has a long trading account or a retirement trading account, and if you have any position with 100 shares or more, you too can sell covered calls. I hope you'll check out our blog, www.reallifetrading.co.uk, and go ahead and click the blog button up top. And you can find fantastic articles about the option wheel, about selling covers calls, and you can learn more about this more advanced strategy. I'm also a trading coach and mentor, along with many of the people that will be speaking to you today. We offer small group mentorship as well as one-on-one coaching. We're a little bit ahead of schedule here, but that's okay. Let's go ahead and talk about our first strategy of the day here, the 10 EMA day trade strategy. So generally speaking, this is a moving average based strategy that really can be worked on any time frame and with just about any ticker. But for the purposes of this presentation and for the purposes of education and how we recommend it to our actual members, those of you that are real life traders, we suggest that you focus on just these few tickers initially here: Roblox, Apple, AMD, Tesla, Delta, and NVIDIA. And basically, this is a strategy that is designed for intraday trading on a 3-minute chart for day traders, but can be applied on larger time frames. Today, we'll be talking and focusing on the 3-minute chart. You're going to want to have both the 3-minute chart with extended hours on, as well as extended hours off. So those of you that use TradingView, you can go to your layout and you can select 2 screens, and you'll be able to place one with extended hours on and one with extended hours off. You're going to want to go into the chart, and you're going to want to draw lines for the previous high of the day and the low of the day, and any other important support and resistance levels and moving averages. And we'll be showing plenty of examples here, so don't worry. And of course, you're going to need to turn the 10 EMA indicator on the chart. Generally speaking, there are a number of conditions with this strategy that we'll talk about in just a moment. But we have found through our own back testing internally that the best time for this strategy is after the first hour of market open. So what is the 10 EMA day trading strategy? The idea behind the 10 EMA day trading strategy is we're looking for an element of reversal, and we're looking for a definitive type of candle that is telling us that there may be a change in what is going on in the sentiment or what is upcoming on the chart. So if we see here on this picture to the left, and I'll talk a little bit more about these in depth, don't worry. But basically what we're looking for initially here is a certain type of candle interacting with the 10 EMA here on the 3-minute chart. We have a number of conditions that we have to consider when we make this setup and when we enter this trade and utilize this strategy. The first condition that we're thinking about is, did the stock gap up to a prior, did the stock gap up above the prior high of the day or the low of the day? Straight, just condition 1. We take a look at the entry on the chart after the open, and did we gap up above the close of the previous day, the high of the day, the low of the day, etc.? If not, then we need to look to condition 2. If yes, we can jump over here to the strategy, which we'll talk about in just a moment. Condition 2, if we did not gap above the prior high of the day or low of the day, then we move to condition 2, and we must wait 20 minutes. And we're using a 3-minute chart here, and we'll zoom into the chart in just a moment. And so that means that we're talking about 7 candles, right? Each candle is 3 minutes, so 7 candles would be 21 minutes. So we must wait for the 7th candle before we enter this strategy and before we take this strategy if we have not met condition 1. After 20 minutes, we wait to see the high of the day or the low of the day from the previous day. Has it been taken out by price action? Did we see price action in 20 minutes move in a manner that took out the high of the day or the low of the day? If so, we can move on to the strategy. If not, we must consider condition 3. And the reason for this is we're waiting for the ultimate setups here. We're looking for the right types of candles. And don't worry, we'll be talking about specifics soon. Condition number 3, after 20 minutes past the open, if we still didn't have a gap above the prior high of the day or low, high of the day or low of the day when we started, and after 20 minutes, we still didn't see price action move above the high or below the low, then we look to see if the stock has a bear candle that is gapping above our open or a bull candle that is gapping down below the open. If we have that, then we can move to the strategy finally. Otherwise, we must finally go to condition number 4, and we have to wait a full hour before trading. So we're talking about 20 candles, 23-minute candles, and really just letting the open play out. I know that could be something that's really hard for a lot of traders. People are very inclined to want to take a trade right away. They've been preparing all weekend. They've been preparing all morning. They've been doing their pre-market prep. But it's super important to consider that you need to follow your trading plan and follow certain conditions when entering certain strategies. And patience, sometimes as we like to refer to it within the real life trading community, patience, if you will, is an integral part of being a successful, profitable trader. And so sometimes if we don't have the conditions on a given day, we must sit on our hands and in this case, wait a full hour before trading. So what is the 10 EMA day trade strategy specifically? First off, as a reminder, we use this on the 3-minute chart for entries. And we're looking for basically both bearish and bullish setups with certain types of candles interacting with the 10 EMA. So if we're looking to go bearish on this strategy, we are looking to identify a bull candle that is a candle that closes bullishly, that closes below the 10 EMA on both the extended and non-extended hours charts. And if so, we look to go short for a breakdown below that candle with a stop above the high of that candle and above the moving average. So we can take a look here at this bullish example as well as this previous bearish example, and we'll talk a little bit more. So if we see here on the bearish example, we can say here that the 10 EMA, this red line here, we have price action interacting with the 10 EMA, prices above the 10 EMA, and eventually we see here, if we take a look at this candle right here, we have a bullish close, a very small body of the candle, right? So let's talk a little bit about what do we see on this specific candle, the one pointed out with this purple arrow. Buyers at the open were able to come in here within the middle of the range of this candle, push price all the way up to the top of this wick, but they were unable to hold that on a 3-minute chart before the sellers came in and drove the close all the way down back towards the open, creating this small bullish body, and it closed below the 10 EMA. So let's talk a little bit about, what is the sentiment behind that? Well, the sentiment could be thought of that the buyers were not able to break out to a new high, were not able to push higher, and that the sellers started to regain some control, and they were able to push the closing price of that candle down below a support level, in this case, the 10 EMA. So looking for that similar momentum and change to occur, we set up a trade with a bearish entry below that candle. Our stop loss is above the high of that candle, and we have the ability to adjust our stop loss appropriately. So in this case, not only do we want it above the high of that candle, we want it above the 10 EMA at minimum. And we want to think a little bit about the most recent few candles and where they were. So for example, we place an appropriate stop loss here just above the high of the prior 3 or 4 candles here, a nice period of consolidation on the 3-minute chart. And we place our stop loss there, our entry below that candle, and we set up our target below. Generally speaking, we go for a 2-to-1 setup so that our risk reward ratio is as good as possible. And that's generally speaking, a very simple way to set up the bearish strategy of the 10 EMA. Now let's talk about the bullish example. The bullish example is the exact inverse of the bearish example. We're looking to identify a bear candle, that is a candle that closes bearishly on the 3-minute chart. It needs to close above the 10 EMA on both the extended and the non-extended hours chart. And we're looking to go long above that candle with a stop below that candle and a stop below the moving average. So basically the inverse of the bearish 10 EMA strategy. Pretty much, you can see here, we have price interacting with the 10-day moving average here. In fact, we have a very nice 1, 2, 3, 4, 5 wave pattern there. And we can see here that price begins to show some element of potential reversal. we have here a higher low forming, and we do not take out the current pivot low for the moment. And we see that a bear candle forms, as we can see with this blue arrow here. A bear candle forms just above the 10 EMA after this interaction with the 10 EMA. And similarly so to the sentiment described previously in the bearish strategy, this bullish setup explains to us that the buyers pushed up price, the sellers came in, but they were not so strong that they were to be significant, push down price back below important support levels like the 10-day moving average or below previous pivot lows. So considering that momentum, we set up a bullish stop limit above the high of that candle with a stop loss below the moving average, as well as below that candle and recent candles of consolidation. And we set up our target with at least a 2-to-1, generally speaking. However, with this strategy, oftentimes, as we'll talk about on the next chart in terms of trade management, we're looking to make not necessarily a full 2 Rs, but to initially think about taking partials or closing our trade at 1.2 to 1.4 Rs. For those of you that are not familiar with the R system that I'm referring to, I highly recommend that after this webinar, you go to youtube.com, type in the R system, that is the letter R, followed by real life trading, and watch the fantastic risk management video called the R system, where you will learn how to control risk in a way that will up your trading to a level that you may not thought could have been attainable before. It's the most important aspect of being a profitable trader, that is risk management. And if you need a good risk management strategy, please check out the R system. It is the predominant risk management strategy that we teach and use here at Real Life Trading. Those of you that are real life traders already are familiar with it and know that every trading decision that you make is eventually calculated using the R system to determine your risk. And you can use it to also calculate your reward. It's an inherent part of our free trading journal as well, which is something that we offer that we'll talk about later, along with tons of free curriculum to anyone who is interested in joining real life trading. So when we enter the 10 EMA day trade strategy, bearishly or bullishly on a 3-minute chart, what do we do in terms of trade management? Well, for beginning, we think about where are we going to exit? We're going to exit at either a new high or a new low. Oftentimes, we're thinking about whether the candles are creating a new pivot. If there's an important previous resistance or support level, whether that be the high of the day, the low of the day previously, the high of the day previously, an important moving average, that can be considered as well. We also think about if we get 5 or more bull or bear candles in a row. That just means that there's a lot of volume coming in one direction. That means that we just need to consider that the bulk of the move potentially is occurring right then and there if we see 5 candles of the same color in a row. And we need to consider, if that occurs, have we reached a point in which the length of the move may have occurred and certain important support and resistance levels are approaching. And that's the case, we think about taking an exit there. Additionally, overall, we want to consider taking a profit target of approximately 1.2 to 1.4 Rs. And we'll demonstrate that specifically on the chart, and so that everyone can see that a little more clearly. So what other considerations must we use for the 10 EMA day trading strategy? Well, much like any strategy, this is not a strategy that is guaranteed to work 100% of the time. Those of you who are traders know that no strategy works 100% of the time in every single market condition on every single chart. It's important to have multiple strategies, as I refer to them, tools in your tool belt. You want to have a tool belt full of screwdrivers, hammers, wrenches, saws, etc. And of course, you want to know when to use those, when it's appropriate to use a saw, when it's appropriate to use a hammer. If you're hammering at something that you should be using a screwdriver for, you may have the tools, but you're not going to be successful. So it's super important to consider that, much like any strategy, this strategy is not 100% effective. And so we have some considerations, which are specifically that if we begin to lose on the strategy within the first 15 minutes, that is 5 3-minute candles, we can start to consider if we want to exit the trade and not let it play out to its full 1.2 to 1.4 Rs. And instead, if we see that we become profitable, even if it's only a small profit above break even after the trade was underwater for 15 minutes, then we should just go ahead and close out the trade for a small win and live to fight another day. There'll be plenty of entries on the chart. As we can see over here, we've drawn up just a chart here within 1 day, we can see a bull entry and a bear entry right here. So there'll be plenty of opportunities on the chart, as we'll talk about in just a moment. Additionally, if you're going to take 2 trades at the same time in the same direction, and you find that those trades go from winning to losing and back to winning again, then you should just close down both trades profitably and exit them and live to fight another day and take 2 wins. Additionally, this is where the patience comes in. One of the hardest parts for traders, as our founder of reallifetrading.com talked about today, emotional management might be more than 50% of the important aspect of being a consistent, profitable trader. So once you set up a trade using the 10 EMA day trade strategy, the rule is you cannot cancel the trade for at least 15 minutes. So that would be 5 3-minute candles. And wait to see if the trade triggers and price action moves us to our stop limit entry point. Additionally, once the trade is placed, you're unable to move your stop for 21 minutes. That'd be 7 3-minute candles. And this is critical, not only for an aspect of emotional management that will keep you consistent, but it's an aspect of this strategy because we need to allow the strategy, the important support and resistance levels, and the momentum that we're trying to capture to play out. One of the largest things that keeps traders from being profitable and consistently profitable is they will often manipulate a losing trade into the point where they take their full loss, but not manipulate a winning trade to take profitability at full profitability. Oftentimes they'll take it too quickly and they'll let losing trades play all the way out, creating an imbalance in the mathematics of their trading. So it's important that we have some rules about how and when we cancel a trade, how and when we enter a trade, and how and when we manage a trade. So to begin a little more talking about this strategy, let's watch a short video from the founder of reallifetrading.com, Mr. Jeremy Newsom, talking about this 10 EMA day trade strategy.
Would you like me to give you a strategy that even a baked potato with 0 sour cream could use to make money trading markets? All right, I'm going to show you a strategy that I'm calling the 10 EMA strategy. We're using it in the real life trading, swing trading rooms, and day trading rooms. It's very easy, very effective, super simple, and really, really quick to implement and use. You ready? Let's dive into this video and talk about it right now. You rock. All right, friends and family, here's what I got for you. This is the 10 EMA strategy. What we're looking for is very simple. We are using a 10 EMA on any time frame. We are looking for a bullish candle to close below the moving average or a bearish candle to close above the moving average. Once that happens, we get in with a breakout past that candle. This can be working and this can be used on any time frame. The more you use it, the more you practice it, you'll really be able to feel, sense, and understand the momentum. Perfect example, let's look at Tesla here, and we're going to go back in time just a little bit. And we're going to use a intraday level here on a 3-minute chart. What I'll do is I'll just show you a trade that we took just a few moments ago on Tesla. This is the 10 EMA, and let's look at this trade right now. So the 10 EMA, here it is. This is a bear candle closing above the 10. Now what you'll notice is this is actually the very, very first one. We had one right here on a 3-minute chart, which we did use, and we did take that trade for a small win. But after that, we had bull candles close below the moving average, so we were looking to short. That was nice, very, very pretty. Secondly, after the trade came down, the short came down, and we traded right back into prior lows. We got a bear candle closing above the 10 on a 3-minute chart. Therefore, entry was above there, boom, boom, pow, nice entry. There's your stop loss, and you trail the stop accordingly, just like anything else. So that's the 3-minute version. Here is the daily version of this exact same strategy. And again, bullish candle closing below the moving average, you're looking to go bearish. So if I back up, back it up. You come over here. Just a few days ago, you had a bullish candle on Tesla close below the 10. You also had a bullish candle right here, close below the 10 EMA. When you get that candle set up, you go, okay, awesome. I'm looking to get in below this candle, stop above, recent candles, recent pivot highs. Next candle that comes in, another bullish candle also closing below the 10 EMA. That gives you 2 opportunities to go, all right, if it breaks lower, I'm going to get in bearish. Well, it did. Bang. Now, if you didn't get in on that day for whatever particular reason, you could have done a limit sell to get in on a retest of that bull candle. They stop loss right there. Got filled on the retest. There's your inside candle. And then, holy smoke show, Tesla sells off like a absolute banshee. Now, on a bear perspective, here's a bear candle closing above the 10 EMA right there. Entry would have been there. Stop loss would have been there. Exiting at this resistance at about 1.2 Rs, right? This resistance there, or this gap area. Now, if you didn't exit, no big deal. You got stopped out, and all is good. While small, you were able to play some bearish trades over here with these bull candles closing below the 10. Guys, this is easy. We go back in time a little bit. Here's some bear candles closing above the 10 EMA on Tesla. Bang, 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 bang. Getting in above those bear candles, stop loss somewhere down here, and you wrote it up for a nice win. Very pretty. Let's go use a few more examples. This was a trade that we took very recently on OKTA, Octa. And Octa just coming into present day, backing up the time just a little bit. Here's a bull candle that closed below the 10 EMA. Was there a bear candle that previously closed above the 10? Absolutely. The last one was right there. Notice we never went above that candle. So we would have gotten triggered in, no big deal. Here's a bull candle closing below the 10, entry there, stop there. Next candle, didn't get filled. Next candle, didn't get filled. Next candle, haven't gotten filled yet. Next candle, filled and hit the target all on the same day. Right? You're shooting for a 1.2R win on this particular trade, or if you're in short, exit with a new low, exit at a support, exit at a level that you feel like you want to get out at. Obviously, we can see that this strategy does not work all the time, every time. Case in point, bull candle closing below the 10, entry there, stop there, we got stopped out. It's okay to get stopped out. What's not okay is to not have a strategy that's easy, simple, fast, and repeatable that works very, very frequently. Just going back in time, fastest thing I can choose, look at this. Very first bear candle closing above the 10 EMA. Bear candle closing above, bear candle closing above. You're getting in on this candle, stop loss is down here, target right around there. Boom, there's a winner. Bear candle closing above the 10. This is over earnings. So I'm assuming you've gotten in there and probably exited the exact same day for a small win. Keep in mind, the more you practice this strategy, the more you'll see a really, really good setup, and you'll start to identify what looks picturesque and what looks really, really, let me wait on this one. Example, here's a bull candle closing below the 10. Notice it was at a support. The stock had already gone down from 245 to 215, and we had a bunch of bear candles in a row. Also, you were pretty far away from the 10 EMA at this particular instance, so you really want to be closer to the 10, interacting with the 10, and have just gotten above or past it. Another perfect case in point, right there. Bull candle, closing below the 10, gorgeous. And as a reminder, this does work on every time frame. We looked at the daily, we looked at the 3-minute. Here's the weekly chart. Let's go to the Qs. Weekly chart on the Qs. The reason that the Qs are selling off so strong is because we have right now a bull candle closing below the 10, and we went lower than that candle on a weekly time frame. The last time we closed below the 10 on the weekly chart was October 4th. We never went lower than that candle, aka didn't sell off. Previous time, bull candle closing below the 10, did not go lower, aka no sell off. Same thing here, same thing here. That was why this was such an obvious, easy, and super sexy signal to make crazy good bear money on the way down. Bull candle closing below the 10 EMA on the weekly chart, first time in forever, and it did break lower, even though it did not the last 3 or 4 instances. Ladies and gentlemen, that's the strategy. Make sure to come over to reallifetrading.com and check out all of our information. I'm going to have all kinds of classes, content, videos, and updates on this strategy because I'm going to be focusing on this exact strategy for all of 2022.
All right. Thank you, everybody, for taking a moment to watch the 10 EMA video here. And as Jeremy mentioned, this is a predominant and focused strategy for 2022. And we hope that you will use this strategy and learn more about this strategy. Feel free, of course, to reach out to any of us. Those of you who are real life traders and those of you that are interested in joining, we'll be providing contact information at the end of the webinar. So let us talk about some charts. Here we are on a 3-minute chart of Apple with the extended hours turned on. We can see here, this is the date of November 23rd, 2021. I've gone in here and marked the high of the day as well as the low of the day. We have here on our chart our exponential moving average of 10, that's this gray line here, turned on. And along with any other important support or resistance levels marked, that's pretty much all we need. So let's go back here and talk about the conditions and the strategy. Condition number one, looking at the open on the next day, did the stock gap above the prior high of day or low of day? So here we are, the next trading day. We can see here pre-market action. We can see here the high of the day and the low of the day marked. Here's the opening candle. It's a large high wave candle, but did it gap above or below the high or the low of the day? It did not. As we can see, price action opened within. So condition number one, the answer was no. So we must go to condition number two. We need to wait 20 minutes. So we need to wait for 7 3-minute candles. This is our first candle, 2, 3, 4, 5, 6, and 7. So here we are, 21 minutes into the open. We take a look at our conditions. After 20 minutes past the open, have we gone below the high of the day? Gone about beyond the high of the day or below the low of the day, aka were they taken out? Well, unfortunately, we have not seen that occur. Obviously, we can see here, we have the high of the day, we have the low of the day, and price action has still not moved beyond one of those. It is contained within. So conditions say that we then must think about condition number three. After 20 minutes past open, does the stock have a bear candle gapping above open or a bull candle gapping below? So we're looking for a bear candle that is gapped above the open. No, we do not have that. Or a bull candle that gapped below the open. Well, we have some candles here down below the open, but they are not bull candles. They are bear candles, as we can see. So that condition has not been met. And as a result, we must wait 1 hour before trading in this specific example. So that's 23-minute candles. We have 7 so far. So to demonstrate this through a backtraining scenario, we will create the 8th, 9th, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20th candle here. So here we are 1 hour into market open, taking a look at the chart. Let's go over to our strategy, since now we're able to utilize it as we've met all our conditions, and talk about, do we have a bullish or bearish entry? So we can see here on the chart that price opened with a high wave candle. Price pushed up above the 10 EMA, came back down, formed an element here, something that resembles something like a bottoming structure, maybe a double bottom type pattern. And we can see here that price has begun to interact once again with the 10 EMA. So what are we looking for on our strategy if we wanted to go bullish versus bearish? So as we discussed, if we wanted to go bullish, we need to identify a bear candle closing above the 10 EMA. At the moment, we don't have any bear candles closing above the 10 here. If we wanted to go bearish, we need to identify a bull candle closing below the 10 EMA. We do have a bear candle closing below the 10 EMA. But in terms of bull candles closing below the 10 EMA, we have this candle here, but it was before 1 hour, so we're unable to use that candle. And we must wait at the moment because we don't have the setup yet. So we would wait for another candle to form. And here we are. We can see that a bear candle has closed above the 10 EMA on the chart, and it presents us with the opportunity to go bullish. So according to the 10 EMA setup, we're going to create our entry above that candle. We're going to have our stop below the low and below the moving average. And we also want to consider recent price action. So, depending on the type of trader that you are, if you're an extremely conservative trader, and this is not necessarily my recommendation of the setup, you could place your stop way down here below this price action. But that's not the intention of the 10 EMA strategy. The intention of the 10 EMA strategy is to capture the momentum of the move. And so you don't need to create your stop so far away. You do want to be considerate of the candles, and you don't want your stop to be too tight. So what are a couple of rules to think about? Well, we need to think about in support and resistance. We need to think about lows of the days and highs of the days. And we need to think about recent price action. We can see here this candle has closed with some distance above the 10 EMA. And at minimum, we're going to be placing our stop below the 10 EMA. But we also want to consider the recent candles. We can see here this indecision candle before we had a bit of a breakout here. So I think an appropriate stop would be to place it underneath that candle. And of course, there can be an element of some subjectivity here. And so we'll show a couple examples here of the stop in different places. So we're going to set up our trade with our initial target here of 1.2 approximately. We're looking to take the breakout from that candle, and let's take a look. So as we can see here on this candle, we would be triggered into the trade just approximately 6 minutes later there. Price action interacts with the 10 EMA. We can see here, we moved into an element of profitability, but we're seeing a retest. And we can see there that on that candle, we would have reached our profit target approximately 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 candles later, or approximately 45 minutes. And that's as simple as it is, ladies and gentlemen. That is the 10 EMA strategy, and that's one example. So let's talk about a little bit about this stop loss and about the ratio of creating a 1-to-2-1 trade here before we give some more examples. Let's say we had decided that we needed our stop loss to be down here because we wanted to be more conservative on the trade and make sure that our risk was being managed the same. Well, we would need to, of course, then in order to create a 1.2 trade, we would need to raise our profit target as well. So let's see if we had done that, what would have occurred. And we can see here, just a few candles later, we would have still additionally, using this 10 EMA strategy, reached that profit target as well with an even more conservative stop and setting up our chart with still that 1.2-to-1 risk reward ratio for the win. Now, what if we had made our stop tighter? If we had made our stop just underneath the 10 EMA and underneath the candle about as tight as we could, well, that would allow us to create a closer profit target, targeting 1.2. And as we can see, that trade would have been profitable and we would have been able to close that trade out for a win in a very short number of candles here after entry, approximately 1, 2, 3, 4, 5, 6, 7 candles, only 21 minutes. So this is a great strategy for someone who doesn't want to sit in front of the chart all day and manage. This is a great strategy that is simple and profitable and repeatable and easy to do. So let's do some more examples of it here on Backtrading. We're on a 3-minute chart here. I'm just going to go ahead and zoom out a bunch. And we'll just move back in time here. Pick a random day. And let's take a look at the 10 EMA strategy once again. So here we are on a 3-minute chart. We have picked here October 28th of 2021 on Apple. We can see here the previous day's price action. So let's go ahead and mark those highs of the day and those lows of the day. We can also see here that we have a support resistance line drawn on the chart. So it's just something that we're going to want to keep in mind as it may be important in the day's price action. And we are still here showing candles in the pre-market. Okay. And here we are with the open in this example. We can see here that we had the open. It was a large high wave indecision-like candle. If we take a look at the previous high of the day and the low of the day that we have drawn, we can see that there is a gap. We have gap down at open below the low of the day, this red line overhead. Taking a look at our conditions, condition number 1, did the stock gap up above the prior high of the day or below the low of the day? Yes, it did. So we're able to come in and think about taking this trade. We have our open. We have an interaction with the 10 EMA to some degree here. We even have a bear candle closing below the 10 EMA, but we are looking for a bear candle closing above the 10 EMA if we look to go bullish. So we'll be waiting for another candle here. Once again, bear below the 10. Here we are with a bullish candle below the 10 EMA. So we've identified a bull candle closing below the 10 EMA on our chart. We're going to set up going short. So we can see here that when we identify a bull candle closing below the 10, we're looking to take the bearish strategy. We set up our trade. I think an appropriate place for our stop loss might be, as is required, above the candle, above the 10 EMA, and above this prior indecision candle. Set up our trade with our 1.2 initial target here. And let's take a look what would have happened with the strategy. So we can see here, almost triggered in. And we would now be triggered into the trade. And we can see in this instance, we would have been stopped out. So as Jeremy mentioned in the video, and as I mentioned as well, no strategy works 100% of the time. We want to make sure that we're managing risk accordingly. And so we would have a stop out on this trade for the moment. But let's take a look at the candles that have formed throughout the day here. We can see that if we wanted to go bullish on the strategy, and yes, we can take a bearish trade on the strategy. And if we get stopped out and we feel that the chart is showing momentum to the upside, whether it be by looking at RSI or other indicators or through price action simply, we can reverse the strategy on the same day and go bullishly as well. So if we're looking to go bullish, we need to identify a bear candle closing above the 10 EMA. We do not have that at the moment, but we do now on this very next candle. So we could consider setting up a long position with a stop below the 10 EMA, below recent price action, the target of 1.2. And let's see what would have happened. Well, at the moment, we have not been triggered into the trade yet. We can keep in mind here that we need to wait once the trade is placed 15 minutes. So that would be 5 candles. And so at this point, we've waited that amount of time. We've not been triggered into the trade. So we have the option of canceling the trade, or we have the option of letting it sit. So in this instance, just for demonstration purposes, I think we'll go ahead and just let it sit and play out the day. So we can see here, price action still not triggering the trade just yet, but yet now we have. And in fact, despite us setting up this trade on a much earlier candle, we actually have here another, if we take a look at this candle right there, another bearish candle closing above the 10 EMA, actually meaning that this setup is completely appropriate once again, right here in this very moment. So we can see here price action playing out. We, of course, have to allow the trade to do its thing. We want to be patient. We want to make sure we're not moving our stop for 21 minutes, 7 candles. We want to make sure that we're not canceling the trade for more than before 15 minutes. And we can see here that we would have exited this trade profitably at this candle here. And here's another example of a successful 10 EMA day trade strategy. So as you can see, we've shown 3 examples here on just random points on a chart using Apple on the 3-minute chart as an example. Out of those 3 times, the strategy was profitable to a win of 1.2 or greater, depending on your setup, 2 out of 3 times. And 1 time that we were stopped out at just the loss of 1 R, because that's how the strategy is designed. So as you can see, it's a very simple, very straightforward strategy. It does have a number of conditions and a number of trade management requirements. But as Jeremy mentioned in the video, if you learn to hone yourself in onto the chart and take a look at these examples here of bull and bear entries, and on your dashboard of reallifetrading.com, you have access to a free PDF called the 10 EMA Day Trade Strategy. That includes all these instructions, as well as many more examples, both bullish and bearish on several different tickers. And I encourage you to please take a look if you'd like to learn more about this 10 EMA day trade strategy. I hope you found this helpful. I personally think this is a wonderful, fantastic, repeatable, easy to follow, profitable strategy that does not require you to sit in front of the chart all day long. It's capable to do this on any time frame, as we discussed, although today we just focused in on the 3-minute chart for you to practice and learn about this strategy. But I encourage you to try it on the daily chart and to think about what it is that this strategy is specifically trying to capture. As Jeremy mentioned in the video, there's a momentum component here. We're looking to identify candles that express something in their sentiment. And as I discussed earlier, when we see these types of candles closing on each side of the 10 EMA, what we're seeing here is a potential change in price action. If we take a look at the example I have on the screen here with the 5-wave pattern here of price moving lower in a downtrend, we can see that the candle that we identify as our perfect setup for bullishness in this example forms after that consolidative pullback. And we start to see a change in sentiment, a change in price action, and we end up with a candle that, as I mentioned before, is indicative that the sellers are losing control. Hence, we want to go bullishly. And that important support resistance level of the 10 EMA is a wonderful, simple way for us to make that measurement. As you can see on the chart, we've removed a lot of the extraneous information. We've removed extra moving averages and Bollinger Bands and other indicators that oftentimes traders are using. And while I do personally find many of those helpful in different scenarios, for the purposes of the 10 EMA day trade strategy, the idea is to keep it nice and simple and repeatable. And that's what we're going to be talking about today. Some of the different strategies with the different presenters are strategies that are easy to learn, that are repeatable. As Jeremy said, a baked potato can execute this strategy for profit. And the 10 EMA is the first one of those. And we'll be talking about some more popular and in-house proprietary strategies. At this time, I think if I'll open myself up for any questions. If anybody has any questions about the 10 EMA strategy, anything we talked about in this session, anything from the video or on the charts.
Amazing stuff, Josh.
Thank you, Ben.
It's a fantastic strategy. And, you know, what I think is great about the strategy is the fact that there's a simplicity to it that helps you strip away sometimes. You know, we've talked about this before, where you can lay on so many indicators and you can get very much caught up in the paralysis of that. And when you strip everything back, you know, whether you're looking at it as a beginner, whether you're looking at it as an advanced trader, it's a really powerful strategy to start to get your teeth into. We've got questions coming in already just to get a little bit of clarity around using the extended hours.
Sure.
So is that something that maybe you could go back over?
Sure, absolutely. So to begin with, let's talk a little bit about some chart setup, right? If we're just here on any chart, and we'll just pull up one perhaps that is not too messy in terms of what's drawn on the chart. So first off, right, we want to talk about extended versus non-extended hours. So if we're here, let's say on a 3-minute chart on Netflix, and we're looking at our candles at our price action. If you come down here on TradingView, where you see this little ETH, you can click that and you can see regular trading hours. So that'll remove the pre-market and the post-market, as well as extended trading hours. Additionally, you come over here to this plain box where it says select layout on TradingView. Come over there and you can click right here how many screens you want and how you want them, the orientation. So if we click like this, now we have open here 2 screens, both on the 3-minute chart. Maybe we'll pull Apple back up since that's the one that we were talking about previously. 3-minute chart here of Apple and Netflix. And we can see here we have the option of clicking between these charts. So for example, we can put the extended hours on this chart. Then we can come over here and put the regular trading hours. So when we're utilizing this strategy in a live market situation, this is how we want to set up our chart. That way that when we see the candles come in, we're able to see the differences. So let's talk about why there might be some differences. Well, first off, when you have the extended hours turned on, the pre-market and the post-market trading is being calculated in the way that the EMA line is being drawn, and it's also being calculated in the way some other aspects of the candles may be drawn. So, for example, we're looking at the same time frame here, but take a look at these closing candles. We can see here that price action looks quite similar, obviously, as it should, because we're looking at identical points on the chart. But if we take a look at where the 10 EMA line happens to move relative to some other places on the chart, there are some subtle differences there, where candles are closing very close to the moving average on some chart, but in other situations, they're just below the moving average. So the reason that we use both the extended and the non-extended hours is to confirm that the type of candle that we're trying to identify is in fact the type of candle that we're looking for, that candle that is showing a change in momentum and change in sentiment potentially. We're also looking to have a further confidence boost for the probability of the trade by using both extended and non-extended hours so that we can see that close confidently. And we know that if we see that on both those time frames and that our conditions are met for the strategy, that we can then enter the strategy. A couple other things to consider. You want to mark on our strategy the important points, right? The important support and resistance levels. So we can go in here on our individual charts and we can mark those previous high of the day and the low of the day. And when we're using the extended hours chart here, we want to make sure that we're also taking into account pre-market highs and pre-market lows and mark those on the chart if it's appropriate as well. Because an important part of the 10 EMA day trading strategy is not only that it's very simple to set up, and it's very easy to follow and learn the setups, and it's repeatable and pattern-based. But we also want to think about where do we take our profits. Generally speaking, as discussed, we set it up with the 1.2 to 1.4 target zone. But if you remember from the trade management part of the strategy, and yes, we will be sending all of this out in PDF to everyone who's subscribed to the webinar, so you can review it on your own time, and this video is being recorded, so you'll be able to rewatch it at your own time and your own speed. But part of the trade management has a series of different points here where we're looking to exit. We need to think about a new high or a new low in price action. We need to think about those previous support and resistance levels. That includes important moving averages. That includes high of the day, low of the day of the previous day. That includes the pre-market high and the pre-market low. And we also want to keep in mind the sentiment that we're noticing live. If we see 5+ candles in a row of the same color, what is that indicating to us? Well, that's indicating to us that there's a potentially exhaustive move, that the momentum is there and it's all gone all at once. And so if we see something like that and we're profitable and we're near our target, especially if we're above 1R, oftentimes we're setting these strategies up with at least a 1-to-1 risk reward, or in this case, 1.2 to 1.4 to 1. And we want to think about when we see that type of serious momentum in a row about taking our profits there. As we saw in the examples on the chart, there were some instances where price moved around a lot while we were in the trade, continuing to be driven higher along the length of the 10 EMA. And as we can see, the 10 EMA oftentimes provides us the type of support that we're discussing. For example, if we're looking here for, once again, identifying a bear candle closing above the 10 EMA on a 3-minute chart, what we can see here, that this candle right there would be our first bear candle closing above the 10 EMA after this recent price action. We can see here we had this downtrend, right? A little bit of a bottoming formation. And we have that bear candle there. And we would set it up as so, with our stop below the moving average, below the consolidation, the breakout of the candle, our target 1.2 to begin with. And what do we see in this trade? Well, we can see that we're getting something like an S curve, right? The all-powerful S curve. And if you'd like to learn more about S curves, please do look up Real Life Trading S curve video on YouTube. It's a wonderful video talking about the concept of the S curve and what it means when we see price action making this shape. Specifically, we talk about this consolidative point in the middle of the curve. And that's what we're seeing here. We can see that price action has broken out from that candle, triggered us into this trade. we have an element of sideways consolidation right here. And then after that consolidation, it resolves to the upside for further breakout, and we reach our profit target. Now, as we discussed, we want to initially set up our trade for an exit at 1.2, but something I recommend to do so that you can let your winners run is create profit target number 1 at 1.2 if you're going to actively manage the trade and watch the chart. And then you can create a secondary profit exit at 1.4, giving you the opportunity to exit for a total of 1.3 on average. Or you can create a third profit target then at the final, either 2-to-1 risk to reward setup or an important support resistance level overhead. So had we set this trade up accordingly with any of those profit targets, 1.2, 1.4, 2.0, we can see that we would have been able to exit profitably. In fact, we would have ended up with 1, 2, 3, 4, 5 bull candles in a row, taking us just beyond that 2.0 R win. And at that point, if we were still involved in the trade as a result of the conditions, of course, the 5+ candles in a row of the same color, we would go ahead and close out this trade for a nice, fantastic win of 2 Rs plus. And that's really what it is. That's as simple as it has to be, the 10 EMA strategy. And as Jeremy mentioned, and we talked about a little bit today, this is utilizable on any time frame and on any ticker. You can even use it on ETFs because the idea is that it's a momentum capture strategy. But we recommend that you stick with the 3-minute chart with the extended and non-extended hours chart, and you focus in on Roblox, Apple, AMD, Tesla, Delta, and NVIDIA for practicing this strategy. It's a really great strategy to practice day trading. It's a really great strategy to use for swing trading. It's a really great strategy to practice your back trading as well. If you want to learn more information about it, of course, please sign up to reallifetrading.co.uk and have access to the PDF. There's some additional videos on the 10 EMA strategy if you search Real Life Trading 10 EMA strategy through our YouTube content at www.reallifetrading.co.uk's YouTube channel or reallifetrading.com's YouTube channel as well. All right. Well, thank you for tuning in here for the 10 EMA day trade strategy. Do we have any additional questions? If not, we'll take a short break.
Yeah, we're just coming up to time here now. Josh, thanks for that. Again, amazing, really well delivered, really concise. There's so many things you can do with that strategy, isn't there? Like you could really start to unpick it, start to look at obviously the different time frames, go into those, back trade them. Like overall, what would be your advice on anyone who's just hitting that for the first time?
I think you want to stay focused so you don't become overwhelmed. So that's why we recommend that you just stick with these few tickers and that you have a preparation period here where you set up your chart, go in there, draw in all the lines. Don't just, mark them in your head. Get on the chart and put the lines for those important moving averages, highs of days, low of days, support and resistance levels. Set up your chart accordingly, as we talked about today, with your 2 different time frames here and your extended and non-extended hours. And do some practicing. The best way to learn this strategy is by doing. And that means trying it on different time frames. Today we're talking about it on the 3-minute chart and using it for day trading. And as we saw, we provided multiple examples where it can be successful doing so. And that's its intention, is to be designed to capture momentum really on any time frame. And so, we at Real Life Trading are a pretty rigorous team when it comes to doing back trading and analysis of new strategies. And we encourage you to have the same mentality as a trader. You need to hone your edge, you need to back trade, and you got to practice this strategy. Practice it on multiple time frames. Start with it like we are in episode 1 of this webinar on the 3-minute time frame, day trading it. But then maybe try swing trading it on the daily time frame. And we hope that you'll join us for future episodes of these back trading strategy webinars where we will be taking these strategies and subjecting them to different tests and tribulations and putting them on the daily time frame, on the weekly time frame, adding in additional indicators potentially, and seeing, how thorough and how robust these strategies are. But the beauty of the 10 EMA strategy is it's simple. That's why I love the 10 EMA strategy. That's why I teach the 10 EMA strategy to my coaching students and my mentees. I think that it's a strategy that you can learn in a day. Now, you're not going to become an expert in it in a day, but you're going to practice it. And when given this really great, successful tool, this is going to be another tool in your tool belt that you can use in different market conditions and different market environments. It's a strategy that doesn't require you to sit in front of the screen all day long. You can program it with your stop loss and your profit targets in advance. You can set it and forget it to some degree after you master it. And it's utilizable both in the bullish and bearish direction on multiple timeframes on the same day. You can go bullish and bearish on the 3-minute chart if the setups are there on the same day on the same stock. You can go bullish in one and bearish on a different one. And in general, keep in mind that you want to make sure that you're considering trends, and we'll be talking about trends today a little bit more with some of our other presenters. But of course, you want to always think about the larger time frame and the trend when utilizing any strategy as well. All right, welcome back, real life traders and prospective real life traders. Thank you for joining us once again for this strategy and back trading webinar. My name is Joshua Banner, host of Tech Tuesdays. I hope you enjoyed learning about the 10 EMA day trading strategy. Now we're going to be joined by an additional panelist here, Mr. Dean Bradshaw, also one of the co-founders of Real Life Trading. And he'll be talking to us today about himself, what he has done as a trader, and also introducing you the MOMO momentum strategy. So let me go ahead and turn it over to Mr. Dean Bradshaw.
Well, team, now I'm having some video trouble, so you can't see me today, which I think is actually a good thing, you know. But anyway, I'm going to try and take the screen, Josh, if that's okay. So I can go through it. I can't do that either. You cannot share the screen, so you need to stop sharing, I think.
All right, perfect. Go ahead.
Look at that. Look at that. Seamless. That's good. Oh, we got my Slack conversations. Here we go. Here we are. Perfect. Cool. Well, look, Josh, I'm just going to say that was a phenomenal little webinar that you just did, and it's going to be very hard for me to follow that. So, Josh has set the bar really high, so at least everyone after me will do a lot better. So that's how we should all be looking at. I've actually helped. I'm a team player. I've helped the rest of the team out. So the next 40 minutes is going to be average in comparison to Josh, but I'll do my best to try and keep you all entertained. So I'm Dean Bradshaw. I am one of the co-founders here at RLT UK. I think my official title would be CFO, which means I look after the money. You know, whether that's a good thing or not. I did start my career off as an investment banker for Audacity Capital in London, but the hours and the reward were as a young boy was far too hard for me. So I decided to become an entrepreneur of businesses instead. Currently, I do work alongside private equity in their merger and acquisitions division. So we actively are looking for companies who are looking to, or owners that are looking to exit, and I advise if they should invest or not based on the numbers and the business, if it makes sense. I've been very fortunate in my life that I have built 2 businesses and sold both to private equity. So I understand the whole process of startups to selling. And you can tell which bullet point my wife made me, right? I do live in Spain. I'm happily married, and I have 3 wonderful children. Now, they are wonderful, just depends on what day you meet them. Before my corporate career, I did play professional football in the UK. If we've got anyone from the US here, they call it soccer for some strange reason. But I didn't play for anyone or worth mentioning, but I was fortunate enough to call it my career at some point. And the role that I have here at RLT UK, and this is why it's going to be interesting for me to do this back testing webinar, is normally I look at fundamental analysis because I look for longer term investments, position trading. I don't actually day trade. I suppose you could class it as swing trading. The only active roles that I do is I sell options, so I do some credit spreads or the options wheel strategy, which we'll probably cover it in another session. So out of everyone here today, I am probably one of the few, even in the entire RLT community, I would boldly say is I've used a lot of my analysis based on fundamentals. So I'm looking for good companies with long-term upside and try to buy them at a discount and buy and hold. So this is why it's going to be very interesting for me to do a back testing strategy, right? Because I don't back test. You can't back test to see if a good company was if a company was good or not, right? So this is the reason why I picked the MOMO strategy for this very reason. Is because the reason why I don't day trade or even swing trade, because I found out that I was terrible at it. So I think you have to have this mentality. And it's what we're trying to give to everyone who asks me about trading is, Are you a trader or are you an investor? Because they're two different mindsets. So you can be an active investor, which is phenomenal, right? And I do that. I don't just buy and hold and wait until, I'm an old man before I cash anything in. I try to buy low and sell all-time highs and then rinse and repeat. So that's how I consider an investor mindset, or being an active investor, where trading is completely different, I feel. So I needed something that I could do that would help me, because timing is everything in trading, right? So the strategy was made popular by the RLT CFO in the US, Malone. But essentially, the reason why I like it is because it's an indicator that tells you when to get in and when to get out, which sounds amazing. Right? We're going to go through some examples shortly. But the reason
sorry
why...
to cut you off for just a second. Could you click slideshow for us in full screen?
Hold on, mate.
Just to the top right.
I don't know where that is.
Oh, top right, you'll see slideshow next to share.
Okay. And then you want to do...
No. Keep going to the right, top right of the screen, not on the toolbar. And you'll see here all the way to the right, slideshow. Keep going right. Slideshow. There you go. And then that'll put you into full screen on your slide. Thanks so much.
Cheers. Look, if someone could have told me that right at the start, though, right? Come on. No, I've just been talking. I've given my best pitch, and now you've interrupted me. But cheers, Josh. So anyway, basically, I needed something that was going to tell me when to get in, when to get out, to make my life simple, if I was going to decide to do some day trading or some swing trading. So Malone created this strategy. We didn't create this strategy, but he made it popular. So basically, a MOMO is a momentum, and it's a trend trading strategy, and it uses the 8 EMA and the 21 EMA. So they're basically two moving averages, and what we're looking for is when one crosses. And what that does, when they start to cross, it's going to tell us when to get in and when to get out. So, for example, the 8 EMA is our bullish one and 20 EMA is our bearish one. And what do I mean by that? So if the 8 EMA is above the 21, then we're looking for bullish place. So we're looking to go long. And reversely so, if the 21 is above the 8 EMA, then we're looking to go short in a bearish trade. Sounds very simple, right? And it really is simple. But there's a few caveats and a few things that, if you are going to use this strategy, we might just need to just pay attention to. So how do I now move on to the next slide is the big question. Let's see. No. How did you do it? Oh, there you go. I'm there. So this is an example of it, as you can see here. So look, how great is that? Like, enter short and along. So you really get an understanding of it. It helps you make a decision. But you can see from this example here, especially this area, look how choppy that is. So it's like, you enter short, exit long, then you can maybe get that. That'll be a nice little trade, but then it does chop up a little bit. So there's a few things that I use when I do this that help me. One, I don't use a 78-minute chart, which is made popular. I use a daily chart. I think that just gives me a little bit more time. But secondly, I pick one direction I'm going to trade in. So I'm a perma bull, as anyone knows. That being an investor, you have to be a perma bull, I suppose. So I only look for longs. So that helps me with the actual chop, because again, this is essentially, I like things to help my life rather than hinder my life. So I don't want to be sitting in front of a chart and looking, or getting an alert to say get in, get out, get in, get out. The management becomes too much for me. So I only look to go long to use it. And then we'll see if there's a better setup, because I wouldn't use it blindly, but we're going to go and look at some examples just to give you an example. Now, in terms of you can have all the details. We'll send everyone in the PDF, I believe. So this is in terms of management and risk size. Now, again, I'm going to be totally truthful. I don't use this at all, but this is the mechanics of it. So if you was going to use stocks, then risk between 5 and 10% of your account, and if you're going to use options, risk between 1 and 2%. Now, 5 and 10% of your account might sound a lot, but you got to remember that you're going to get an alert when to get out of the trade, because the trend has changed. So you can get out before it causes any real damage. Personally, I still am in favor of the risk unit. So whatever your risk unit is, whether it's $100 or $200, then I will still use that as your R. So risk 1 R to try and make 2. For me, I'm a very cautious individual. So that's the reason why I do that. I'm comfortable with that rather than risking 5 to 10% of the account. I get it. You're going to get an alert that will tell you when to get in and out, and for some damage. However, I'm always that person. If you experience just one day in my life, my whole 24 hours is scheduled So if I miss something, then I don't want to wake up the next day and, didn't get out and you end up with a huge loss. So to cap things off using a risk unit and setting up a trade is a lot better for me. So that's just the rules in and around that. Again, I don't use these to that degree, but the best thing to do is to show you some examples, I suppose, and we can learn together, right? So this is see if I can do the next part of the tech. Lucky I'm not involved in the tech part of the team, right? So if I hit new share, and then I'll be able to share my, or can I just come out of this now? Let's just try it. How do I exit this? How do I get out of this? No. Ridiculous. How do I exit the full screen, Josh? Oh, there you go. I got it. All right. Okay, cool. Can everyone see my chart? I assume we can.
We can, Dean.
Perfect. Cheers, mate. So again, look, just a quick one here in terms of, look, this is the chop. So you imagine you was just going to use this religiously and you're going to go, okay, look, exit long, enter short. That's a nice trade. But then up here, exit short, and then exit long. Now, I don't really want to be, as I say, in front of my computer, getting those alerts on a daily basis to get in and out. So for me, just to look for something down here, which is an ideal trade, tells you to get in, there's a width apart, and then you can play that. So that's the one thing that I do in order to, if I do use this strategy, which is very rare, by the way. I just want to make a full disclaimer on that. I very rarely use this. I'm more of a long-term trader, but let's just go through it together and learn as a unit. So let's get my rewind button or replay button. Or we're using Apple. We can use Apple. We can use any other chart. Have we had any recommendations about anything so far? You can use any. You can try this on any ticker symbol. I think I see Texan, right? Was that Pat? I know Pat's just used.
I was about to say, yeah, we missed Pat earlier, so it'd be great if we could do this one for Pat. For Pat.
Well, let's do it. Let's do this for Pat, and also Pat is one of my most loyal people. Turns up every week to Investment Monday. So this is for you, Pat. Texan Instruments, where are they?
Pat also shows up on Tuesdays as well. So
nice.
Pat is all in. Good on you.
And I'm a big fan of these, by the way, as well. The company confirmation. Let's just get rid of that. So we're on a daily chart and move all this stuff out of the way, and let's see if we can find my replay button, and we'll just go back. And look, you can see I like this. I've already got some drawings on there, so we'll just keep going back for a period, and then we'll just stop, say here. Cool. So we've missed that swing already. So let's just play it for a little bit, see what happens. Wow. So if we just went back one more, we'd have had this to start off with, and we could have just ended the webinar and showed how great that indicator was. Cool. So look, it got quite close here. Didn't quite give us an alert. Looks like it's just that's a huge run, that, isn't it? Wow. Well, let's just talk through that. Because again, you can just see beforehand is you get that chop. So this is what, and I love this expression, by the way. This is what Matt, who again made this popular, said: you get in here and you get out here. You get in here, you get out there. You get in here, you get out there. He calls them paper cuts. So you're going to have a few paper cuts before you end up with this big swing that we get here, which was huge. So that's the idea of the strategy is. If you use it religiously, you're going to have lots of little wins and lots of little losses, but then all of a sudden you'll catch that big swing, which everyone wants. That's the idea of the strategy. So we've got something happening here, which again, I don't really want to go short, but for intents purposes, we're just trying to figure this out, right? Let's just see if it works. So we just got this trigger to go short on this candle. I would have set up a limit on that price. Maybe a stop there, and you're looking for two. I want to go 2 hours because this is a swing trade. Effectively, we're using a daily chart. So I think Jeremy likes to do a 2.3 or 2.4. That's been quite popular throughout the RLT community for everyone that's involved with it. But for me, if I can make double my risk unit, I'm happy with that. So let's just see if this would have worked out. And I think we'd have just missed it, right? So again, you could have just moved your stop and sort of guided yourself out, but that's just missed target. Will it roll over? Don't know. Cool. So say we would left that religiously, and we probably would have got out for 1 point. I don't know what that is, 1.8R if you'd have done that, or you didn't and you got stopped out. But now we get the short. So it's like, okay, that moves over. We think the momentum is changing. We enter short. So again, looking at it here, let's just follow it blindly and just see how many we win and how many we lose, right? Because that's what backtesting is about. So this is the price level. So you probably would have been triggered in with that. Because what we're saying is that on the rule set is that you're getting on the close. So if that was the close there, you set up a limit on that close. So you would have been triggered on this one. And let's just get back out of that. Let's come in here. We'll go long. And this one may not work out. Let's just see. I am looking again for 1.2. Well, I'm probably going to hide this, which is, I'm going to go here. Make 1.7R. Let's see. We're probably going to get stopped out of this one. It's not looking great already. Nice strong bull candle comes in. Not too bad. Let's just see. Right, okay. And we're out. So again, you can see on one occasion works, one occasion it doesn't. So what we're going to try and do is I think we should keep a running tally and see if we can catch that big swing. So let's just say, look, we won. I don't know if are we keeping a tally or am I supposed to keep myself? Probably me, right? Fine. So we made 1.8R there. Ben, maybe you can keep a tally if I'll write it down, and then we lost an R.
Yeah, go for it.
So we're 0.8R right now. Okay, correct? If my basic maths has worked out. So we're 0.8R. Let's just keep an eye on that. Cool. So now we're just waiting for the next one. Did we miss that one? Let's just go back because I want to see if we can actually catch these big swings. This is good for me because I've not back tested this before. So it's great. So this is the enter short one. So it's enter short. Let's see what happens. Come in here. We'll get on the limit. Say around there as a stop. And we're looking for, let's just go with, we'll try to go for 2 Rs. And if we need to move our stop, then we'll move our stop. 2 Rs, fine. Let's just see what happens next. That one would have triggered us in. Now it's looking a bit hairy. Okay. Not too bad. When them big bull candles come in, it does make me nervous. I'm not going to lie to you. It's hanging around for a few days and now we're at the short. Okay. So we would have, if we get rid of that, because now it's that the alert's gone off to come out the short to enter long. So we probably would have lost, what would you say that is? It's tough to figure that out, right? But you've got to say that's like, I don't know. You'd be in a minus, let's just say we're minus what, point something, 0.3. Let's say we're plus 5R so far out of 4 trades, just for simplicity's sake. I don't want to keep everyone here too long. I do get a little bit pedantic at times. So now we're going to enter short based on this one. Or enter long, I should say. Okay, we'll get in here. Because I'm determined to try and see if we can catch one of these big swings, just to see if this strategy actually lives up to its name. But for now, we have a 2R mark. And what we'll do, this is what, if it starts to approach our target and these areas start to get wider, like they are here, then we'll just continuously move our stop until we get stopped out. And we'll see how that works. Let's just see what the next steps are. Okay. Next one comes in. Okay, we're in a trade. It's looking good, getting wider. Even when the bear candles come in, still looking like we're in that momentum. Perfect. So we've hit target on that. So that's 2.8R. So 2.8R, Ben, you're keeping an eye on that, yeah? That's 2.8R plus 0.5, did we say, right? So so far, so good. However, because for me, look, perfect, cheers, mate. So because of the width of these two here at the moment, this is a great opportunity where we can just start moving stops to try and actually see if we're going to, this is the big swing that we've been looking for. So let me get out of this and bring out that, clear that drawing. Let's go with horizontal ray. So let's put our new stop here for now. We'll put stop loss. So this is our stop loss. So we're still in this trade. We're going to go. We're hoping this is going to be the big swing, and we're just going to keep moving that stop every time we feel like we should do. See, I'm holding here because I'm hoping, okay, we'll be out. So that's not the big swing. So we took that risk. So instead of making that 2 point whatever R, we only made 1.4. So Ben, if you can add that, was 1.4 we'd have made before we decided to get out. So now we're saying ain't a short. We've got to catch one of these big swings. Have to.
So we're sitting somewhere around 2R at the moment, aren't we, all in?
2R all in, perfect. Okay. So enter short, let's just see. And then you can start using things as your target. So this area here for me, it would be a target. Especially going short, I like to be in shorts getting in out very quickly. So there's some congestion here. So for me, that's going to be a target area. Let's just go with that and see what happens. Next one comes in, next candle. It's a really horrible position and you can't see nothing. Here we go. Let's do that. Perfect. So we're in the trade. And we're stopped out here. So we stopped out for, that would be our R. So minus an R. And now we enter long. We've got to catch one of these big ones before my time's up. Have to. Let's speed things up. 2R-ish, that would do. Let's just see. Enter long. We're in the trade. Don't do this to us. Stopped us out. That's it. So we're out of that trade for another R. So we'll probably break even now, right? That's going to change. Let's just see what happens. So now we're going to end short. We'll use that target again there. See if we can make 1.6. If we can get back into something.
Tough day at the office so far, isn't it?
Tough day at the office. But this is the problem with the strategy. But this is why it's always good to test them. This strategy chops you up like that, right? So normally you would just do one. The best thing that I would suggest is just try and go one direction. Don't use, because it gets chopped up too much. But the purpose of the strategy is that you keep getting chopped around and then you get one big swing. So I've never done it before. So I just thought, let's just try it live. Why not? It can only get better, right? So, because I just really want to see if we can catch that swing and how long it would take for that to happen. So yeah, let's just we'll continue. How long have I got left? I've got some time, yeah.
Oh yeah, you good? You're running up to your sort of last 10 minutes.
Right. Okay, we'll try and speed things up. Okay, we're still in short. In the long, so we needed to change it. So that would have been a loss. Would have taken, I don't know, about half an hour as a loss for that. And now we're in a short. Now we're in a long. So this is the one. I think we've got to hit that long one soon. We should have been here. And let's just see if we can do something with that. In the short. You see the problem with it, right? There you go. So we just literally got into a trade, held up to get out, and that's probably going to be, we'll take that R, to use that as an R, as a loss. And we're hoping that soon or later, it's going to give us that big R. I think it's going to happen now. Some consolidation happening here. It's trading sideways. I think that next bullish one that comes in has to be the big swing for us. Otherwise, I'm going to write an angry letter to Matt DeLong for showing me this strategy.
I'm lost. Are we back at break even?
I hope so. Right, so we're starting to get in here on this candle. Just get in. Hopefully this is it. But this is the difference between a trader and an investor, right? This is why I don't trade often. I do sell options, I must admit, but to me, the same principles apply with investing. You know, you're looking at. I sell options, so I look to try and see where the stock won't go. So again, we'd have lost out on there. It's telling us to change, so that would have probably been that's about. This is called at an R because it's close to the risk unit anyway. So we're probably down. We've got to catch one of these big ones before I leave. We have to. Otherwise, it's been a very difficult day. Just buy the stock at a decent price and hold on to it. Texan, you can't go wrong with that company. Here we go. Is this going to be a decent swing for us? All this looking better.
Come on.
Come on. It's not going to happen for us, is it?
Get there.
All right. There you go. So we'd have to change. So the strategy would change. That's 1.5 R win. And look but this is again, look how quickly that chopped up. Enter short, now enter long. Okay, so we're going to go, we missed the short one that happened too quickly for us, I suppose. Say we didn't get the alert, we'll go with enter long. We'll go here, off this candle, it looks a bit high, but we're sticking to the strategy. That's the main thing. What did someone say? That is your plan, is this, your strategy is to stick to your plan. So that's our plan. Go for 2 hours-ish, see what happens. Okay, we're in. That was off to the races a little bit. And then we enter short here. So that would have been, forgive me, that would have been just about, I don't know, say an R. That would have been a win for an R. Then enter short. Let's get in here. And that'll be a quick target. Hopefully we're going to, nice. So that would have been a 1.2 R plus. You could easily stay in that if you wanted to. And that could have been the swing, but normally the big swings are bullish. So let's just see. We'll get in here, trying to go as quickly as I can because I really want to get a big swing in. What are we on so far, Ben? How are we doing? Are we up or are we down?
We've managed to reclaim it a little bit. So you're sitting more like around 3.5 R.
Right, 3.5 R. A lot of work for 3.5 R, don't you think?
Was a lot of work. It's a lot of sweat.
It is a lot of nervousness. So we're in here. It looks like we don't know what's going to happen. So we're out here for an hour. How long have we got left? 3 minutes. 3 minutes left. Short.
Yeah.
This is major chop territory. So this is chop city right here. We'll try and get that 1.2 R just to 1.4. Well, that'll do. Let's just see what happens. Okay, you wouldn't even got triggered and it said to go long. It's changed. Is this it? Before we close up or answer for questions. Very hard. Let's go for 2R. Oh, come on. Okay, that's close. Oh, nice. All right, okay, this could be the big swing. So let's just say it's a big swing, right? We're going to move the stop. We're going to move our stop. Where is our stop? Where's my vertical line on? Horizontal line. We've got a couple of minutes left. So let's just move it here so we can't lose on the trade. This is going to be our stop. This could have been what we've been waiting for all this time. Stop loss. Here we go. Every time it's like, let's say if I get like a bull candle comes in like that, we'll just move the stop. Let's just guarantee our win though from here. So that was 2 hours. Let's guarantee our 2 hours to finish off with. And then we're out. So 2 hours. Cool. Ben, what did we finish off on? What was the final result?
So after that arduous journey, it was around 4.5 hours, wasn't it?
No, 4.5 hours. So you got to think 4.5 hours. Yes, great. You know, you're 4.5 hours, or whatever it is. So 4% of your account if you use a 1% of your trading. But for me, this is a daily chart, and there's a lot of days that have gone into it, and that was a lot of effort. And again, if I'm going to do that type of effort, then I really want something to be quicker than that. So it's not a strategy that I would use. I'm not saying that it's a bad strategy. It just doesn't suit my personality or my needs. And this is what happens in trading. I think, you know, there's a lot of communities out there or a lot of videos out there that always show how simple things are and this is how we win. I would have went through a lot of pain doing this type of strategy if that was what I selected. I was chopped out, it was in, I was out. And for me, it doesn't, for my personality and for my style, it wouldn't be something that I would regularly use. If you want to just experiment with it, then feel free to. I would definitely pick one direction. I think that would be the safest way, and maybe use something like the 50 EMA just to make sure that, you know, there is some momentum there. So my conclusion would be that that wouldn't be a strategy that I would use. But I hope that was helpful in how something you can find something that can help you enter a trade, or give you an idea. You might want to decide to catch the momentum and then wait for a pause or something, right? So you might decide for weight to go long, like in here, and then you wait for like a gap between the two EMAs, wait for a pause, so something like that, and then try to get in on like a retest and try and play something like that. So it's just something that you can use as a guide. A lot of people use it. I found they use it in terms of they're looking at the broader market to find out how, if the market's about to change because the EMAs are getting closer together, which is a decent way. Matt DeLong has used a strategy tester, I believe. Yeah, Matt's the one who made this famous in RLT, for example. So he's the one who brought this to, and he does it really well. I think he still uses it to a degree, right? So it's worth mentioning a premium version of MOMO. Then you can backtrade and see the performance. Yeah, that's exactly it. You can do that. But again, I think, which is brilliant to say, Tony, but for what I like to do, like we can all use like backtesting tools and backtrading tools and like see how it performed over in the last 10 years, 30 years and whatever. And that's great because it shows you what you can do, but it doesn't give you that real-time experience. Because don't forget, you can put this strategy into TradingView and backtest it, but that's going to, 30 years of experience, 30 years of data condensed into 30 seconds, however long it takes to draw that, right? But you physically got to be the person to keep going in and doing that and having to go through that pain, and your human psychology will kick in. Because if you start to get chopped up, like I did when we seen just now, like sometimes I set up a trade and the next day comes and it's telling me to get out of the trade. Then it's like, that's something that I physically got to do. And it's, my own emotions is going to get involved with, I can't involve with this, right? So I think that's the reason why, again, probably because I've not got a trader mindset, which took me a long time to decide where I am. I think one of the best things I heard from real life trading is Matt DeLong, when he was talking about that he tried to day trade and he was a closet swing trader, and he decided that was his way forward. That was how he became profitable. I tried both, and yeah, I did okay. I did okay, but I am much better at finding companies and looking at companies from their financial standpoints and their management teams, and then trying to buy them at discounted prices. So that's what I try to preach when I do my stuff with RLT UK. The technical stuff we leave to the better boys. We've got so many more better traders than me on this call. Josh, Dr. Hage, who's coming, Joey is probably the best Forex trader I've seen. So for me, it's like, you've got to stick to what you're good at. But that's why I love doing this whole back trading and back testing to see if there's anything that might ring true one day.
I think you're spot on, Dean. That whole piece, the psychology piece, is so important because we're all spending that period of time where we're all sitting on our own. We're all going through this stuff, strategy after strategy, hour after hour. And there is that point where when you go from strategy to, putting it into real practice and sitting there and being patient and sitting on your hands or reacting too quickly, not having the restraint, it's all such a massive piece of the puzzle, isn't it?
Exactly. And that's exactly it. And I think, we all need to, you have to find solace in something to give you validation that, okay, what I'm doing is right. That's naturally in humans. Like for me, I go to, my wife is I go to her before I do anything, make any decision, because, she just gives me that validation, right? So that's it. But this is the reason why when I normally do my trading, so just so, the people that don't know me, that I do a lot of credit spreads and I do longer term trading, because the same process goes into it. I'm only going to do, because I'm trying to sell a spread on a price where I don't think it's going to go. Now, lately the market has been crazy, so we don't know where the price is going to go. But normally I'm looking at where I don't think the price is going to go and get paid to take that option contract out. So the same process goes in. I'm looking for companies that I trust in, that I can go to sleep at night thinking, yeah, okay, look, they might be down at the moment, but, they're not going to go down. Like, Apple has down days, you buy more shares. If Apple has down days, you buy more shares because Apple's not going anywhere. It's a beast of a stock. And I think, there's others which I talk about during our meetings on Monday, who I think are in the same category. So down days don't scare me on them because the companies are run efficiently and run properly based on looking at their financials, which is brilliant. Publicly traded companies have to disclose everything that they're doing financially. So you can go through them with a fine-tooth comb and give yourself some confidence in that. Does that make sense?
Yeah, and I think that's an interesting point as well, that you're talking about using things like this for an options play. Now, I know we haven't got anything specifically lined up today about options, but it's kind of cool to think that you could use something like this to give you those yardsticks to help you kind of see where those movements aren't going to go, so you can see how you're going to play it. Like, if you're looking at maybe something that's about to go long on the chart here, and you're measuring that up against some high volatility that you're seeing, when you see that high volatility come in, then you've got a potential play there, and you've got a little bit more confidence in the assumption that you're making, right?
Exactly, that's it. So you can look at this. So, for example, if you were looking at where we are now, and you said we got this thing to go long, right? We've got this indicator, so look, go long. You can look at the two EMAs. You can see that they're quite wide apart, and you might be able to see what premium you can get if you sell a contract down here. So you can sell a monthly or weekly or 2 weekly, and then that just gives you an idea of how you can set up a trade. So this is one thing that I wouldn't say I disagree with, because I think it all depends. Like I get it, whatever you're going to use, just make sure you use it and don't use bits of it. I get all that, but for me, I think it's all guidelines. So it's like, okay, look, you have to take in. There's no one strategy that is going to revolutionize your trading and you're going to become a billionaire overnight. It's not going to happen, but you need to take into consideration everything. So you can use EMAs to see where the momentum is, but look at the volumes as well and see if there's any trap traders. And, is it a double top? Are we at all-time highs? All of that type of thing. You need to take all of that into consideration in order for your trading to take off. Really, I don't think there's just one strategy that otherwise everyone would use it, right? So there's a lot of aspects to it, but you have to get started somewhere and just get used to it, get confidence in it.
It's like your paint palette. It's what you're bringing in. It's the mix of colors that you're bringing in, which is definitely a really valid point. And just the other thing to mention, and sorry, Dean, if you mentioned this at the start, but I know with MOMO, I think Matt had originally set MOMO up to run on 78-minute charts. Isn't that?
Yeah.
That's right, isn't it? Yeah. So again, like going into different time frames, going into the 78-minute, seeing how it runs on a 78-minute versus how you get the results off a daily. And then, of course, the underlyings that you're using. So, you can get some hugely varying results out of that, can't you?
You can, exactly. That's it. You can use it. You can use all of this stuff in all time frames. You really can. But you see here, look, you'll get like a couple of chops before you get a big swing, and you get a couple of chops before you get a big swing, and again there, and that's basically what the strategy does. So you can use it on all time frames. I know some people that religiously use it on a 3-minute chart or 5-minute chart. So it's definitely can be used on all time frames, but anything in trading can. And I think that's the beauty. Once you understand that everything can be used on any time frame, and it's just down to putting in some time and some effort to back test and like I say,
understanding the personality of the underlying. Like Jenny just mentioned there, Matt likes to use the 30-minute with MOMO on fuel cell. So clearly that's had good results. Exactly,
that's it. And again, it's all about back testing and getting used to how the stock moves, and then like Josh mentioned right at the top of his one, right? He's the 10 EMA strategy. He's giving you, 3 or 4 stocks that it works the best on. And that's someone that has spent time to do that or used the premium tools to back test that and things. So, I get that. Do you enter during the day or after the market closed on your setup? Well, Renke, that's a tough one for me because, like I said right at the top, I don't really trade like that. I don't trade shares. I only buy shares for my longer term portfolio, and I generally just trade options. So I just sell options throughout the day whenever I get a chance to look at them. But you can. I think the idea is that you get the alert whenever you get the alert that the moving averages has crossed. Then you try to get in on a limit buy of that price. So it can be down to your discretion, really.
That's it. I think we're there, Dean.
Cool.
Right on the 12 p.m.
Perfect. Well, cool, guys. Look, if you want any questions, anything, then you just email me at dean@trading.com. I promise you now, this section, MOMO, was going to be, especially me doing, was going to be the worst one today. So everyone else is only going to get better from here on out. You listen to me bumble on for 40 minutes. Reach out to me if you need anything. Other than that, then, yeah, have a good day and love life, live life, and trade it.
Thank you so much, Dean. Really interesting to learn about this momentum-based MOMO strategy. And as everybody saw, you have the ability to add the indicator to your chart on TradingView, making those signals as simple as possible. Following Dean's presentation here, we're going to just have another short break. So go ahead and get yourself a sandwich, take a stretch. We'll see you in approximately 10 minutes. All right, thank you so much, real-life traders and prospective real-life traders, for joining us for this webinar. That's the end of our 10-minute break here, following our presentation by Mr. Dean Bradshaw, host of Investment Club Mondays at Real Life Trading UK. Coming up next, we're going to be talking with Coach Joey Malone, who's our Forex trader, our main Forex lead. And he's going to be talking to you about a fantastic trend-based strategy for trading Forex that he uses to extract consistent profits from the market. So let's turn it over to Mr. Joey Malone.
Hello, hello. Welcome, everyone. All right. Everyone see my screen? Is it all good? Everything fine?
Yep, we can see you.
Awesome. So Joey Malone, Coach Joey Malone. I'm born and raised here in Middle Tennessee, just west of Nashville, about 30 minutes west of Nashville. Pretty local as far as the RLT US community goes, not far from Jeremy and all those guys and ladies. I have been a husband for about 19 years, and I've been a father for 20. So I got 2 boys and 2 girls, oldest being 20 years old and the youngest being 10. So they all go in about 4 years of increments. I got 20, a 16, a 12, and a 10-year-old. And we are not growing anymore. That is not a growing family anymore. So we are content with how we are. I am a middle school creative writing teacher, but funny story is I have just moved over into a history class, and I plan on taking the praxis to add history to my endorsement. So I will be doing that. So I'll be learning something new. I've been an English teacher for a pretty good while and a writing teacher. So now I get to move over to history, which is, I've always liked history. It's not something that's going to be like, new and nothing I've never been interested in or something. So I'm pretty excited about it. Sports lover, especially baseball and bowling. This time of year is my favorite time of year. Unfortunately, though, Major League Baseball cannot come to terms on things. So pitchers and catchers have not reported to spring training, and that has not gotten started, which is very sad for me. But I grew up playing baseball my entire life. Actually went off to college playing baseball right away. But then I fell into what I love now, which is bowling. And over the last 20 years, I've been bowling constantly. If you can't find me in the school building, I am at the bowling alley more than likely. I'm rarely home. And through bowling, I've become the high school bowling coach here. Over the last 3 years, I was able to coach my son his senior year, and he moved on into college. And then my oldest daughter is actually a part of the team right now. So that's kind of fun. Obviously, all my kids bowl. We, this year's team, top 4 in the state. So it was a good year. Over the last 3 years, we made some huge strides. So the program's turning around, and we're definitely putting Dixon County bowling on the map. But anyways, I am a Forex trader. So I have done it all in the trading world, from trying to get rich quick in the penny stocks to trading options to crypto to everything. And I found Forex pretty early on and then just kind of went away from it. But when I came back to it after talking with Dean for a while, anything that has a chart doesn't really matter. I love staring at charts. I could literally stare at candlesticks all day, every day, and just, draw lines across it and use it as geometry puzzles or whatever. But I just absolutely love charts. So Forex is kind of what I'm doing, and I really enjoy it. So with RLT UK, I am a coach and a mentor. So kind of fun, man. I really like meeting new people and kind of teaching them what I do. It kind of gives me some confidence in what I do, and it gives me more reasons to really look at the charts. So let's move in over to what we're going to be looking at today, which is my strategy. And the strategy, it's the coach's Forex strategy. It uses a trend line and 3 EMAs. And this kind of has evolved over the last 8 months. When I first started, it was basically just the 8 and the 21. And then it was kind of MOMO-ish on the 1 hour, but I used it on the 1 hour chart. And then I started noticing a lot of retracement in MOMO. And kind of like what Dean was happening to Dean, a lot of choppiness. And I was trying to figure out ways to not get chopped up. And with Forex, it's, it'll wick high and low and, 20 and 30 pips at a time. So I was trying to figure out a way. So I started using trend lines, and trend lines kind of helped me, along with the 8 and 21 cross, kind of helped me determine whether I should be in or not, or when I should be in, instead of just kind of jumping in on the close of each candle. And then after a little while longer, I started trying to figure out the trends of certain things. So I threw the 50 trend line and EMA on there. And that's, something that's kind of helped me, know when to sell or know when to if we're on a downtrend or if we're on an uptrend. The 50 kind of lets me know that. So anyways, we will identify the overall trend on higher time frames using the daily and the 4 hour chart. And then we'll go to the hourly chart and try to determine a short-term trend. Once we find that short-term trend, we will put a trend line on the bodies of the candlesticks. And I'll go over a little bit of why I use the bodies of the candlesticks and not the wicks. Got a couple of examples that, might convince you to use the bodies instead of the wicks. So look for clear breaks and close below the trend line. So candlestick has to clearly break the candlestick and close below or above it, depending on which direction you're going to trade. And then make sure that the 8 and the 21s have crossed and that the 50 is either above the close of that candlestick for a sell trade or below that candlestick for a buy. And depending on the trend that we're in will depend on whether or not we are going to look for a total of 20 pips more, or try and just target 10. So we'll place our entry at the retest of the structure. Again, I don't trade the breakout of the trend line. I trade the retest of that trend line. And we will enter below the trend line for a sell or above it for a buy. And then we'll always use appropriate risk management for your stop loss and profit target. I usually target, it's like a 1.33 risk to reward. I think the stop loss is usually around 15 pips and the profit target is at 20. So let's jump on into the charts. And first and foremost, I want to talk about using trend lines on the wicks and why. So let me go over all these lines on this screen real quick. So the blue line, the blue EMA right here is the 8 EMA. The red EMA right here is the 21. And this thinner purple one is the 50. So as you can see, we are in pretty much kind of a good little downtrend. And then we get this nice consolidation in which we have a trend line drawn right here on these wicks. Now, I like using some annotations. So let me get this. So I have this trend line drawn here and it's touching this wick and then we're breaking through. And as you can see, we do have a bear candle that is breaking down below this trend line. And at this point, we technically don't have a cross of the EMAs until 2 candles later. So for one, I would not have been in this trade. 2, if you did get in this trade anticipating the cross, you would have been stopped out, obviously. And in hindsight, it looks pretty. But if we move that same trend line to the bodies, we don't even really have to guess whether we're going to be in it or not. As you can see, this is not crossed at all. Even though it did break down through this trend line, it hasn't crossed. So there's no reason for me to even be considering this as a trade. So I wouldn't be on. So using those bodies keeps me out of this trade, keeps me out of losing that one. So this kind of consolidates more to the right. And let's say you were a little more patient, but still using the wicks, and you got in right here. Well, look at where this cross is compared to the break of the trend line. So a lot of space right here, a lot of space. And that to me is one, I've missed the initial momentum move. Like I don't want to get into it this far away from the trend line on that break. Two, it doesn't really even retest the trend line for me to even get into this trade. So I probably would have set this trade up looking left on some structure, at the bottom of these wicks or whatever, and this candle would not have come up and got me in. So I would have missed that trade altogether. However, let's look at the trend line if we place it on the bodies. Well, now, as you can see, we are closer to the cross. In fact, the candle that breaks the trend line is where this crosses, and it retests perfectly the trend line. We do go into a little bit of a drawdown, but with the 15 pip stop loss, we were only probably a few pips in drawdown, not too bad. And then all the way down for that. Easy 20 pips right there in hindsight. And then also, let me clear these off real quick. If you look, even if we were to get into this trade, let's say at the close of this candle or, near this trend line or at the top of this other candle, let's just say we were able to get in that. I mean, look at the amount of pips that we were able to get in beforehand. That right there is 13 pips. That's a difference of 13 pips between this trade and this trend line and using the wick. So to me, that's a super important part of this strategy. And if we're going to back trade, let's go ahead and just do it right here on the Australian dollar, US dollar. I'm probably going to go really fast because I've had about 4 cups of coffee. When you wake up at 3 o'clock in the morning to start this stream, you tend to, drink the coffee pretty quick. So anyways, let's go ahead and jump into some back trades. All right. So nothing here. If I start seeing some type of consolidation to the right, that's where I start really looking at to where I can put my trend line. And really, it's just kind of playing around with it. Something that I always say is that when you're using trend lines or any support and resistance lines, these lines are only on your chart. They're not on anyone else's chart. So you have to use the trend lines that you're comfortable with that gives you confidence in getting into a trade. So we got a break here, on this trend line that I put down. We do break the trend line, but if you notice, the EMAs have still not crossed to the 50 is way above our heads right here. We're going to bump into it, and look how that candlestick really respected that 50 EMA. Even if this goes higher, I just consider that a mistrade, but per my plan, we didn't get across. 50 was, not in a good position to take this long. 2, it didn't even retest anyways. Probably wouldn't have been able to get on it, even though that is an amazing hammer with great volume. That's it looks like it's 7 or 8 o'clock right here. So that would have been New York Open. That's, maybe somebody else gets in per their plan, but using this strategy, I'm not in this trade at all. Let's keep moving. And there you go. That's glad I wasn't in that trade. So we didn't get across to the EMA. And as you can see, it's an immediate rejection of that 50. So I used to get in some of these trades sometimes when they would break and we'd get across, and I didn't have the 50 on the chart, and it would do something like this and just have an immediate rejection, and I would end up losing, getting stopped out for a full R loss, for the full 15 pips. And I just kept wondering why. So I just started playing around, realizing, Dean loves the 50 EMA. So through, coaching with him and everything, I just decided, let's just go ahead and throw it on the chart, see what it looks like. And I started realizing this right here happens way more often than you could even imagine. So the 50 has saved me from getting in trades that I knew I shouldn't have been in. So now that we also have a new push up here, I'm going to play with my trend line and put it in another position to take a trade. All right. And even though I know that we are on a downtrend, obviously, and if this does happen to go up, trade to the upside here, I will not target a full 20 pips. It's going to be against the trend. So I will be looking to get in and out pretty quickly. I'll have a tighter stop, probably somewhere around 10, looking for a 1-to-1 instead of a 1-to-3, or a 1-to-1 trade instead of a 1.3 trade reward. So let's get back in here. This is a nice downtrend. All right. So right here, this trend line would have been way too high. And this would have just been a trade that I probably just missed. It's a pretty good push right there. But really the break happens down in here. So if, obviously this is in hindsight and we've missed this trade completely, but we'll just look at it anyways. Let's take this trend line, get rid of it. Let's put one right here, right there. Let's see if we can't get into this trade. All right. We would have gotten in probably around the same time. All right. So this is not really a break of that trend. Even if we zoom in, it's not really a break of that trend. This is the break, and then we do not get a retest. So I love how it broke the 50 there. Would have loved to have seen a retest on that on the second one, but because it didn't, we're not in it. Let's slow that down a little bit. All right. Pause it here. Let's change our mindset. The good thing about this is that even though we're on a downtrend and we can trade this both ways at any point in time. Looking right here across the bodies.
Hey, Joey, just one quick sec.
Yes, sir.
With the big day candle that was in there, the big shave bottom candle where you said we didn't break the trend. Sorry if I missed something there. How did we not break that trend? We were obviously on a bearish slope. We have that EMA crossover. We kind of broke through that trend line you drew. What did I miss there?
Okay, so the reason why I'm not in that, so initially, let me go back. Initially, the trend line was drawn way up here, right? And to me, that's not a very good break. And then, yes, we are above it. But the cross of the EMAs, there's a lot of space between the cross here and this trend line. So I would have rather seen that trend line down in this area, and then we probably would have got a retracement towards one of the EMAs. This kind of space between the trend line, and this is based on just doing trading, using this strategy as often as I'd use it, and playing with it as much as I played with it. I have come to find out that this type of trade, even though it works out this time, it's not a very good example. It tends to retrace heavily into this large candle. So I tend to stay away from these big candles that cause this type of separation between the cross and the trend line. Now, not saying you can't take that trade, obviously. Just for me, I'm staying away from it. Did that answer your question?
Joe. Yeah, it does. Fab. Thanks.
Cool. All right. So let's put this trend line back up. We could probably come down here and use it. All right. So right here, we are breaking down through the trend line, but we do not get across. The 50s right in our face. So we're going to leave that alone. I'm going to adjust my trend line now that we have pushed down and we, bounced away from it. And again, that's the reason why I don't take the breakouts of these trend lines, because without getting all of the confirmation that I'm looking for. So I'm going to move this to the body of this of these two candlesticks, And again, I started on the body of this candlestick, not the wicks. Even though the wicks are respecting it, I'm looking at the bodies. Okay. All right. Now we are very close to a cross here. Let's see what we can do. I mean, super close to a cross. And it did break right here at the 50 very, very slightly, but I am going to actually get into this trade. And when I look left, I am looking at structure to the left. All right. So something that tells me price is stalled out right in through here. We got wicks down here. Well, actually, it'll probably be up in here. Yeah. So let me go. Yeah, so I will be looking, right in here. So you see the bottom of that wick, bottom of this candle, right in here, this little stall out area, and then, of course, all this junk right there. This is where I will be placing my entry, be right somewhere right in there. And you could always come all the way back up to the trend line, all right, which is not a bad little place. It's right here at the 21 and the 8 where they are. You do have some wick touches right in there, but I want to be in this trade. So I'm going to place it right there at the tops, these wicks, and right on that body. And trend break. So we got a 15 pip stop and a 20 pip target. Our risk to reward right here is 1.3. And again, we're not in this trade yet. This has to retrace before I'm in. I always play the retest. Yep. We're going to get missed. Maybe. So another thing is, after so many times, remember, these are hour candles. So this is a half a day. More than likely, I have canceled out this trade and I'm not in it at all because this is just taking way too long. So from this break, we are 6 hours later. And it started at 11 o'clock at night. So I may have set this trade up going to bed. More than likely, I was already in bed and didn't see it at all. However, if I did, I may have set it up. We'll leave it on for the purposes of this stream and see what happens. And yeah, we didn't get caught in it. Look how much we missed it by, man. Just a couple of pips. Let's see, the high of that candle right there is 73462, and my entry is 73478. So yeah, 1.6 pips. I get missed like that all the time, where I will go to the top of the structure instead of the bottom of the structure. But again, I want to tighten up as close to that trend line as I possibly can, using structure to the left to try and enter these trades. So didn't miss, and we were right. So, feel good about it. Wow, that'd have been a great trade. Wow. Yeah. So on a trade like that, if we were triggered into it, let's just say we were able to get ticked in, I would have obviously targeted 20 pips. I would have more than likely taken off about 80% and just moved my stop either to break even or just over break even to cover commissions, and then trailed it on down about every 5 to 10 pips or whatever, and then would have probably gotten stopped out somewhere there. Unfortunately, not in that trade at all. So, all right. So now we can switch gears. It looks like we're stalling out here, getting some price action, some consolidation. Now, some of you are probably wondering, why am I not drawing a trend line, like this? For one, this is too steep. The moving averages don't have a chance to really come back and cross over. Let's see. Renko asks, daily chart, 4-hour chart. So again, usually I start out every day on the 4-hour chart, sometimes on the daily chart. But most of the time, it's the 4-hour chart. And that's where I usually just find, kind of where the trend's going. And then once I find the trend, I immediately go to the 1-hour chart and I look for places of consolidation, pullbacks, places where I can draw some trend lines, and then, look to get into trades. So again, this trend line right here is just too steep for me. Obviously, the EMAs are not going to cross before it breaks, so I'm not even in that. All right. And then you'll miss out on a lot of trades like this. But again, I've learned stick to my plan, and it's been, you tend to trade less often, but it's a lot more winners, compared to the losers.
Looking good, Joey. We've got about 5 minutes before Q&A.
Oh, okay. Well, that's fine. Let's see if I can. Let's go to Euro USD real quick. Let's see if I can find where I was at on it. There it is. I had this set up. Just wanting to look at this. Appreciate the heads up on that, man. So again, going back to the trend lines, using the wicks per the instead of the bodies. Obviously, this right here, if you use the wicks here, you're not even in this trade. Or if you are, look at the separation of that. And if you waited until this break, you probably don't get into that trade. But if you just slide this up to the body, let me put it on that candle, and then that body, as you can see, the cross happens right here, and then you break down through the trend line, and then you retest before rolling over. And I mean, this ends up being a really good trade. So that would have been, a great trade. So if we follow it on down, let's see, super fast, just mess with the Euro USD. This is a popular Forex pair. Let's see. Probably draw a trend line from here right to there, but we don't get the cross. So let's just keep going super fast. See if I can throw a couple more trades up here for you. All right here. These are pretty flat. I would like to see, the EMAs, separate a little bit more than what they are right now. So let's see if we get a push up. There we go. Now I can start messing around with my charts and throwing. See if this will come back down. This will be a great short if it comes back down. Right there. Back it up one. So we're right. Oh man, look at that. All right. So we're right on top of the candle, but for purposes of this back trade, I would take this. We are below the 50. I'm just going to snug it right there next to the trend line. Come up here, 15 and 20 pip target, 15 pip stop. Next candle comes in, doesn't tag us in. Isn't that crap? So unlike Dean, I'm getting all these trades that work out perfectly, and I'm not getting triggered into it. So you could have probably justified bringing this down, maybe some right in here on top of those candles right here, maybe, and you would have been triggered into that and easily popped 20 pips. Man, I would love to have gotten that on the recording, but instead. But that's how it works. All right, you look for trend. You make sure you're either going up or down, and that really determines how you would get in. So again, if I was taking the break of this one, then I would really only target 10 pips, right? I would change this to just a 10 pip target, probably a 1-to-1, and see if I can't get in and out as quickly as possible at this break right in there. And that obviously would have worked out, but again, it has to break the trend. It has to cross on the EMAs. Make sure the 50's not in your face. And these trades work out pretty often, and I try and point them out as much as possible. Again, I want to talk about Audacity super fast. Audacity Capital. I've gotten an account with them. I'm hoping to highlight them on Forex Fridays in the coming months. And great company. Their interview process was pretty awesome. And I've been set up with a $15,000 account to make 10%. And once you make 10%, the account doubles. And it's their money, not yours. They incur entirely all of the liability and the loss. You don't incur anything. So it's a great company, great process. They use MT4 I always chart on TradingView, but I have been getting into MT4. I'll try and highlight that on Forex Fridays as well. Thank you, Ben, for putting that into the comment section. So again, you can follow along on that. I usually put it in the chats, Discord and Slack on certain trades. When they set up like this, I'll try and highlight before this happens. And hopefully they set up in the next couple of hours. And we try to get in, what was it? Friday, I think we hit dollar CAD for 20 plus. I think it was almost 40 pips after I partialed out. So it was a really good trade. Anyways, I think that's it. Am I out? Am I out of time, Ben?
You are spot on time. So
Sweet.
We're right into the Q&A, which is fab because well, there's a lot of questions, Joey.
Yeah, awesome.
And this has been brilliant, by the way, because I never get a chance to see you in action enough. And whenever I do, I'm like, wow, he's always smashing it, which is amazing.
Yeah.
So like starting off with a couple of things,
Right.
There's probably a lot of people who will be either here now or watching this coming from a sort of a more trading stocks background.
Right.
But the underlying of stock and how you get into those entries and how you're looking at support resistance and sort of taking some of those themes over to what we're looking at today. Obviously, you know, your strategy is very much built around trend lines. But when you start to look at that sort of wealth of different, Forex that you can be looking at, how do you first of all start to reduce that list down to a manageable list of, okay, these are the ones that I'm watching. And then when I'm going into those, what time frames am I going to use overall? Am I looking at support resistance, or are you going straight into the trends?
Oh, okay. So for the starters, the using certain pairs. So I would suggest starting out with 3 or 4. The dollar pairs are usually the most common: Euro USD, Pound USD. This list right here that I've got is a pretty solid list. We can bring Euro Aud up. This is just like a love-hate relationship for me. The Euro Aussie, if you watched any of my Forex Fridays, you understand. I lost a lot of money on that a long time ago. I've been chipping back at it back when I didn't know how to trade. But no, this list is pretty good. I would start out with 3 or 4 pairs. And if you trade mainly the London Open, then, Euro USD, Pound USD, the GBP, JPY, those would be some really good, 3 really good pairs to start with, because that's, they're gonna get more volatile and more liquid during that time. There's gonna be more action in the market at 1-2 o'clock for me in the morning, but at the London Open, which is 8 o'clock, I think 7 or 8 o'clock UK time.
Yeah, exactly.
In the morning.
8 o'clock, yeah.
If you mainly trade, like say you're in the United States and you trade you want to trade the New York session, well, that opens up at 7 o'clock a.m. Central Time, which will be 6 Eastern. And those, again, the Euro USD, the Pound USD, the dollar CAD is a really good one to trade during that time. And the USD JPY, which is the dollar yen. Those are all good ones. So you can kind of go in and based off of when you're trading, that's when you could pick those pairs. So Australia, Asia session, the Euro the Euro Australian dollar would be a good one. The Aussie dollar would be a good one. Pound Aussie, things like that. Any yen pair during that time would probably be a good one. And then I think, what was the second question?
Jeez,
I
packed so much into my question. Sorry, Joe.
Right. No, you're fine. I think it was something about the trend, right?
Well, it was about support resistance, whether you're coming into this with similar sort of strategies to how you would start to dissect and underlie.
So what I normally do in the mornings every day is, daily or 4 hour, I normally hit the 4-hour chart to me, just because I trade on a more condensed, on the 1 hour is where I trade. So the 4-hour gives me a great idea of where the most recent trend is. If I feel like I want to do like top-down analysis where you start from a higher time frame and work your way down, I may go to the weekly and just drop in some lines. My charts are clear for today, but and then I just go, I may, so as far as support and resistance goes, I may only have 3 or 4 horizontal lines on any chart. Let's see if I can find one. Yeah, there you go. Let me take all this off. Nope, not what I meant. There we go. All right. So as you can see, I've got 3 lines on this chart, and that's it. Support and resistance, because support and resistance just gives me an idea of where price a long time ago has entered this area. It's not for me to really look at present time. It's just, as you can see, these 3 lines have been respected for a long time. And this is a weekly chart. So obviously these lines are important, but I don't necessarily trade off of support and resistance. It just kind of gives me the range. All right. And then I'll, go down to the daily. I might add one, but usually the weekly and the daily are the only 2 time frames that I'll put support and resistance lines on. And once I get to the 4-hour chart, I'm just looking for trend. That's what I'm looking for. I'm looking for most recent trend. And then I go to the 1 hour, and that's where I look for breaks of structure and crossing of the EMAs. Where's my 50 at? As you can see, I got a trade that I am wanting to be in. I'm not in, even though it tagged me there. I'm not in. It happened on a Friday, and I'm not holding over the weekend on the Euro Aussie. I'll wait till Monday. But this is something I might highlight in the next day or so.
Would you set an alert for the crossing of the EMAs? Does that help you?
You could, for sure. Every morning when I wake up and I get to the charts, I usually, with these, 7 pairs that I look at, and if you're only using 4 pairs, it won't take you 20 minutes really to kind of go through and find out if there's going to be a trade setting up that day. So if, let's say, I started right here and this is what it looked like, I think Friday morning or whatever, I could have had a trend line, set up right there. And if it breaks down, I could have an alert set on the trend line, because really the trend line is the first thing that has to happen. The cross may happen, 2 hours before it actually breaks the trend. So the cross is actually secondary to the trend. So I would if I set any alert up, I would set it on the cross of the trend line.
That's good to know, Joey.
Mm-hmm.
And I know we've only got a few minutes left. And I think what's also really useful for anyone looking at this for the first time is just getting a little bit of a sense of the difference in the entries and setups that you do with pips versus, when people might be used to looking at a stock price.
Yes. And I don't necessarily use an R system. I base it on account size. And so if you're trading the Euro USD, which is, again, probably the most popular pair out there and the most liquid, if you trade a 1 standard lot in Forex, and I'm probably getting too technical for a lot of stock traders, but if you trade 1 standard lot, that is basically $10 a pip, which is super volatile, high money. For me, especially. Some people may not think so. A mini lot would be 0.1, and that's $1 a pip. So usually the trades I take will be somewhere between 1 mini lot and 0.5 mini lots. So I'm trading between either 1 to 5 pips. So let's just say I set this up on a 15 pip stop loss. Rule of thumb, I'm only going to lose either $15 or $150 depending on your lot size. Right. So that's how I determine it. And most pairs will be pretty close to that. So that was probably
super useful. I get it. I think it's one of those things that it probably takes a few passes to understand.
Right.
And I know with certain brokers, it's easier to manage your entries on Forex than it is in maybe some other brokers. What are you using for your entries?
Absolutely. Again, for as far as to determine how much I'm winning or losing, I trade mainly the same pairs. So I will always, know basically it's between $1 and $5 a pip on the Euro Aussie. I mean, on the Euro dollar. So I will, I tend, depending on which account I'm in and what type of trade. If it's a longer term trade, it's going to be a smaller amount, lot size. Like if I'm planning on holding this for 4 days, 2 weeks even, then it'll be a smaller lot size so I can widen my stop and usually lose the same amount.
Got it. Amazing stuff. I know we're almost coming up to the end of the Q&A. We could probably ask you a lot more stuff, Joey.
Oh man, absolutely. I know. It's and with Forex, it's I really do. I love charts. I love charting Forex. It's absolutely the most fun thing that I can do in a day's time, which is probably weird, but I do. I love it. And
and one quick thing to just add in, sorry,
yeah.
Joe, was
no problem.
You're not, am I right? You're not governed by the pattern day trading rule.
No, you're not. And you can trade as many times as you want in a day, as many times as you want, no matter what. So there's no PDT rule with Forex. And with most brokers, you can start with, man, I tell you, there are some brokers out there with high leverage, be careful, but that you can start with less than $100 and take trades that probably make you about $20 at a time. I started a small account challenge back in late November, early December. Actually, I think it was mid-December. Traded it for a week and made almost $70 in that week. And it was $100 account. And I made $70 in 5 days.
Amazing.
In Forex. So, and that's a very small lot size and just targeting, 20 pips at a time. So it's very doable.
That's super cool. I got one last question.
Go right ahead.
Big Lebowski, yes or no?
Absolutely. Absolutely. I got the hair to match.
Thanks, Joey.
No problem, man. Appreciate it.
Thanks so much, Joey. That was really great stuff. And great film as well. When Joey's not bowling, as you see, he is entering the market in FX. And one of the things that's so nice about that, and he mentioned that a little bit with his presentation today, is, Joey's up at all kinds of different hours for his work, for his sports, for everything else. And being a Forex trader gives him that ability. It's just another tool in the tool belt so that he doesn't have to trade the same open as everyone else. He has the ability to trade multiple opens. He has the ability to trade at all kinds of different times throughout the day. And also, as he mentioned, there's really the beauty of with Forex, you can trade with a small account, and it's a good place to start learning how to trade. And if you're interested in, taking Forex to the next level, please do check out our sponsor, audacitycapital.co.uk. All right, that was a really great presentation on trends in Forex. We're going to have another short break here. All right, real life traders, thank you so much, and welcome back to our Backtrading Strategy webinar. We just heard from Coach Joey Malone, host of Forex Fridays. Every Friday, if you're an RLT member, included in your subscription, you have access to each of our daily rooms, and each of our presenters today hosts a room Monday through Friday on these different topics, from technical analysis to investment to Forex and beyond. Coming up next, we're going to talk with the host of Wealth Wednesdays, Dr. H, and I will go ahead and turn it over to him.
All right. Can you hear me? Can you hear me all right?
Yeah.
Sounds good. Let me share my screen. Okay. So can you see my screen?
Yeah, looks good. And just hit slideshow on the top right.
Yeah, gotcha. All right. So yeah. All right. So well, I'm Dr. H, and so I don't have much to show here. And mysterious guy, I've been trading for 4 years. I'm an option trader and swing trader. But actually, when RLT UK started, basically Dean called me Dr. H, and we kind of just continued using this nickname. I've been always Dr. H. So for me personally, I feel it's actually better because it's good to maintain a low profile on the internet. Just for me personally, because I don't like to put my names out everywhere. Just personal preference. But anyway, so as you can see, there's a doctor here. So doctor means PhD for me, but Doc Martin is a real medical doctor. So for me, I'm working as a researcher, and trading is just a hobby. At some point, actually, I kind of wanted to go full time. So I actually did some day trading at some point. But just like a lot of other presenters here. So actually, in the end, we just realized that we are the best when we are doing swing trading. So basically, just like that. And so nowadays, PhD, actually got a lot of attention from hedge funds as well. So some actually, I just had an interview with a hedge fund. They kind of interested in me, but I kind of ghosted them because I feel like working for hedge fund is not the best way to make an impact. And I enjoy sharing and learning about trading in this kind of open manner. because if I work for a hedge fund, it's going to be I'm going to have NDA over my head. I won't be able to talk about all the trading and stuff. So I enjoy the process, and to be part of Real Life Trading UK. But this one thing I want to say. So by being a PhD doesn't mean what I do is better than the other mods. Actually, for people that are going too specialized, because hedge fund they don't want us to read candlesticks, but I'm a huge believer of candlestick patterns. But for people that have gone so far into technical fields, mathematics and stuff, we might actually suck in terms of intuitive analysis. I have a lot to learn from all the previous presenters, and also Doc Martin, all those amazing traders. All right, so so basically today I'm gonna talk about hammers. So I've been talking about hammers all the time in my Wednesday room for a while now, actually, at least. So so basically these are the basic properties of hammers. So the whole point of today's session for me is to demonstrate my thought process of fine-tuning a strategy. As you can see, I don't have a lot of numbers here, and a lot of numbers, rules, conditions, and stuff. Actually, Doc Martin will talk a little bit about hammers, and actually that would be all about conditions and numbers, because that would be algo assisted trading. For me, I just want to showcase, like, we got a general idea here. What can we do when we start backtesting? What are we looking for? What should the thought process be? Trading is like, you can't just grab a few numbers and take a strategy, go into the market and earn millions. That's not how things work. So basically, you constantly refresh your knowledge about the market. And the way you refresh is by backtesting. We have to go through the basics. We have to go through the fundamentals here. So I will go through with you in a second. So basically, the goal for me, the goal to back trade is actually to look to fail, because if you win a lot in a back trade, sometimes you tend to get some kind of illusion. You get too much confidence, and that could be potentially dangerous. So actually, it's better to fail, and I'm looking to fail. But you don't just start screwing up. You have to follow your plan and see if it works. And then if it doesn't work, you learn something new. All right. So about the hammers. So as you can see, these are some example pictures of hammers. This is a bullish hammer. This is a bearish hammer, and both of them have very long, lowish shadows at the bottom, and also very, very thin body. These are the properties they have, but they could have different colors like that. So in my trading, the kind of hammers that I prefer to see are those that have very long tails and smaller bodies, because sometimes you could have like a body consisting of like 40% of the size of the candle, and that you can still look at it as a hammer. But for me, I prefer something like this, very thin, like 10% or something. Another thing I'm looking for is volume increase, and that's not shown up in this picture, but we will see in a moment. Also, it has to be formed at a pivot point, at a support or resistance level. Like if you want to trade bullish, it would be preferable if the candle of the hammer is formed at a support. So these are the preferred characteristics, and there are some characteristics that could make it even more exciting, that make me really want to take the trade. For example, there's a little volume peak here by comparing with the volumes before. Also, if they are formed at a very, very strong multi-year support or resistance, that would be also very, very exciting, because you actually have a lot of buyers that kind of help you out. And also another thing is a trap, and that's something I will elaborate in a moment. By trap, I mean actually when the hammer formed. Just imagine you were watching the stock, and when the stock trade, you see this line is open, and the stock during that day actually traded all the way down here, and then rebounded. So just imagine when you're in such a situation, and when the stock trade all the way down, would you go short? Are there some other indications that make you, that push you to start a short, like down here or something? And are you immediately wrong? Something like that. So these will be the basic elements of trap. Also, I prefer to look for bearish hammers for bullish trade and vice versa. Like this hammer will be what I really want to see if I'm planning for a bullish trade. So the guiding principles are generally you have to follow the trend, because if the stock keep dropping and it has been on a very, very long-term bearish trend, and all of a sudden you have such a hammer and you want to trade bullish, you're going counter trend, and generally speaking, from my own experiences, it's actually not the best way to do it. Also, you need to identify a few levels like support, resistance. So there will be a lot of dynamics when you trade. There will be a lot of dynamics, a lot of interactions of the stock with those different levels, and that's very important to look for, to identify them. In terms of execution, generally speaking, we have two different types of execution. That's something you have to decide when you're trying to back trade. So you can either take a breakout, or you can wait for a breakout and take a retest. So here I can tell you, based on my experiences, I would personally prefer the second one, unless there are some really special tickers. Okay, so for back trading, the goal of back trading is to familiarize yourself with the basic principles, but more importantly is actually to understand the individual ticker that you're looking at, because different tickers will have a lot of different behaviors, and there are some tickers that you simply want to avoid, because there are some tickers that simply hammers simply don't work at all, and you won't be profitable in that. And it's always a great thing to back trade and realize you can't do anything with it, and then just dodge the bullet, just forget about it. All right, so let's get started with the actual ticker. So what kind of ticker do you guys want to see? Do we have like a ticker request or something? I want to do it spontaneously, and otherwise, I look at something that I've already looked at, there will be some bias. Okay, so do you guys have any ticker requests? If not, I will try to come up with anything random from my list.
There we go.
Yeah, let's see. What's the name of that? Lloyd's Steel Industry. Oh, that's not. This one, Lloyd Banking Group.
LLOY. Was it?
What? Oh, gotcha. Let's see. Oh, London Stock Exchange. Oh, okay. Honestly, okay, let me be super honest with you. I have never traded on London Stock Exchange, but we can try. It doesn't matter. Let's just give it a try. All right, so that would be fun. That would be a very, very fun practice. But we look at the same principles, and then by doing that, we will be able to learn something no matter what, right? So I actually already saw some really nice hammer here. But okay, so let's go back in time. I personally prefer that. Otherwise, I'm gonna if I use the replay button, I'm probably gonna see the general trend and have a little bit of bias. So this will be kind of like a blind test. I won't be able to know what happens. 2015, okay. 2015, so we're here. All right, so let me close this one. It's a little annoying. All right, so I'm not gonna slide to the right, but let's see. So I have no idea about this stock, okay, whatever it is. But the first thing you have to do when you back trade is to kind of zoom out a little bit to look at the trend, right? So it's fair to say that. So that was 2012, as you can see, and now is 2015. So that's like a 3-year. Like there was a 2-year rally, and then we are trading sideways. So this is the general picture that we're looking at. So when doing a back trading, first thing I would prefer to do is to draw a few lines. For example, here we can see this is this lasted for almost 2 years. So this I think this is a very solid support. On the other hand, there was a trap because there was a breakout that wasn't successful. So a lot of people who bought there, they're looking to sell. That's what you need to keep in mind. And during the rally, of course, this bottom, I don't know when we back trade if it's going to go back down there, but let me draw this anyway. And apparently there's another support here. I think I want to draw it here. So this is a previous, you can say this is a previous resistance, and we also have some interaction here. So if we ever get back down there, this will be another level we could look at. Also this level as well. So on the top, is that all-time high? Let me see. Ooh, 2008. Okay, so let's see. So I don't know if we're going to go that high, but let me draw it just in case. And that will be another good level if we do break out of the consolidation right now. Okay, so there are some lines, and then let's go. So first thing I want to, yeah, go ahead.
Sorry, I was going to ask, do you have a rule of thumb, i.e. max amount of lines on the screen at any time?
That's just your personal preference. You know, if as long as it doesn't confuse you, as long as you visually can handle this many lines, that will be good. So yeah, for me, I think visually this is like maximum I can handle. I don't want more, and that's it. So you need to look for some important levels. For example, there are multiple touches, and there's some, you know, it happened in the past before the drop here, and then interacted again, which confirmed the location. You know, there's some you know, there's some confirmation that happened multiple times. That are things you have to look for. Otherwise, you know, you see there's a level that's confirmed here, you know, but that's kind of in the middle of this channel. So, you know, there's some relatively minor one that you could totally ignore. Anyway, this is a bit subjective. So this step, you know, just I think this is an art instead of having exact science about where to draw those lines, how many lines you draw, and things like that. Okay, so yeah, so basically we are having this dip. Sorry, I actually moved all the way here. So okay, so now we are experiencing a little dip here. And before start trading, you know, let's just take a look at what happened during this year. So well, I can already see some nice hammers. For example, here this one. This was a bullish hammer followed by an inside bearish candle, and then we broke out of it. So hammer at this location, it happened once that it, you know, there was this occasion when it was very successful. And let's take a look at the volume. The volume actually didn't need to be very, very high. So this means we don't have to be particularly very picky about the volume, but volume did have a little peak here, and that was that was a short-term peak, but comparing to the previous one, that was kind of lower. So we don't have to be very picky, but we still prefer to see some kind of volume increase. And I can also see another hammer also at this support location. And of course, it went higher, and the volume was actually pretty much at the same level as this one. And this was I think this was a very nice level. This was a pop, but wasn't a peak. Despite that, the support actually helped us up. So yeah, also we saw another huge hammer here, bullish hammer, but it wasn't formed as a support, and there was not a volume increase during that. So as you can see, actually it's kind of confirmed. We had a little bit of bullish movement, but actually it fell pretty quickly. So that also taught us that the location seems to be a big deal, particularly for this ticker. And let's see if we can find more hammers. Oh, this one. This is a nice, actually, I would say it's an inverted hammer. So, but as you can see, actually also from my personal experiences, I feel like if you want to trade bearish, and if you look for some inverted hammer and you want to trade some breakdowns or something, I feel like the success rate in general is kind of low. And in particular here, as you can see, this, if you want to trade bearish, you might, a lot of people are selling, and actually it didn't break lower. But basically, you see this inverted hammer actually didn't work. Actually, after a few days, it was taken out by this candle. I think within a week. So basically, we close above that. That's a very, very bullish signal, because if you want to short, you would have gotten in and you would have lost money just within a week. But yeah, so it looks like bearish hammer, the inverted hammer, doesn't really work on this ticker. And we see another one, and the volume had a peak here. Actually, that's almost the highest for quite a while. So the location wasn't perfect, but as you can see, the interaction with the moving averages, there we have a daily 50. And it just hit the daily 50 and bounce. And actually, you have to wait for some kind of dip in order to bounce. But actually, I would say the main reason was probably the earning. But on the other hand, as you can see, so as you can see, this kind of location kind of confirmed with this one back then. The location actually matters. This one doesn't work out very, very quickly. It doesn't work out in a nice way like this one. Immediately, just break out and S recovery test and just bounce higher. Doesn't have a clean rotation like that, you see. So location does matter for this ticker. Okay, so now let's get started with actual trading. So my goal is to actually show you like probably like 3 or 4 trades, and then see if we can learn something from it, see if we can keep adjusting our individual rules while we're doing that. Let's see if we can do that. So, well, we saw, well, there is a very nice hammer here, but as I said, I was looking for hammers with smaller body because that indicates more dramatic movement during the day. So this one is less than ideal, but you can see this. Well, but that would be if you trade different strategy. You know, if you look at this as a flag pattern breakout and then retest, or think of it as double bottom, you might want to trade that. But particularly for this strategy, when you're doing back testing for one single strategy, please don't mix up with something else. You know, if you want to test other strategies, you can just wait for another session. So now I'm going to ignore this one and let's just move on and see if we can see some nice hammers. You know, ooh, we got one. Okay, so first thing, as we said earlier, location matters. Oh, sorry. Let me just bring that up again. So this most recent hammer, as we can see, actually location matters, because for a lot of hammers, if it's formed in this support, it tend to work, right? And on the other hand, we don't have to be very picky, because I said if I'm planning for a bullish trade, I prefer to see a bearish hammer. But it seems in this particular stock, it doesn't matter that much. Okay, so now that we see a hammer, and we had a previous judgment about the importance of those factors, and we think the location matters, and it is formed at a very solid support. So what do? We just try to get in. So entry would be here, stop would be here. But as I said, I personally prefer a breakout, because I'm planning on a bullish trade. I prefer a breakout and then take a retest. So this trade is not active yet. Oops. This trade is not active yet. I'm just drawing it and see what happens. Okay, so the next day we actually broke. Let me just make it bigger so that we can see that. Okay, so actually the next day we did trade, we did open higher. So in some sense we did break out. But as I said, I have to wait for a close above and then take a retest. So actually we weren't triggered in. Let's see what happens. Okay, now finally, that's the breakout. So now this trade is in. So let's see if it gets triggered, if we can catch the pullback. So I guess the limit, I would set the limit to be the high of this hammer. And see, oops. And let's move on. Oh, got filled. All right. So the target, a reasonable target would be a gap fill. You know, that could be a first target, very reasonable first target. The second target would be here. So basically this is 1R, this is 2R. So based on a plan, you can, for example, if I'm trading, I would do like, I would probably do like 30% here, 70% there. And when it hits, I would trail my stop and see if it, I don't know, just to protect my downside a little bit. All right, so also these are the rules that you want to tweak while you're back trading, because when you see the result, you will know if it works or not, and then you try to learn something. All right, maybe we will lose. Oops, be patient. Maybe we're gonna lose, but don't get stressed. Oh, there's this gap that saved us. All right, let's see what, okay, we got stopped out. Okay, so that's very good. Okay, so it didn't work. That means there's something we need to learn here. So first thing that you notice here is that actually when you look back, you probably also see this daily 50 here. It has been below the daily 50, and it tried to trade above daily 50, but it kind of failed. So is it a beginning of a bearish trend? You might suspect that, right? Because this, from the bigger scale, this looks like a big consolidation phase. but you could also argue maybe we trade lower from here. Okay, so well, let's move on and see what happens. Maybe there's some other stuff we can learn. Actually, while we move ahead, we see another hammer forming right here with a volume peak. Okay, so in this situation, I would remember the previous trade, because there's one thing. Just keep in mind that the way you set up is to put the entry up here and set the stop loss exactly at the low wick. But we could potentially do something differently. But for that, we still don't have a conclusion yet. That is to make the stop wider. For example, you can try to make the stop like so wide, like based on previous candlesticks. But let's wait to judge. Let's just keep waiting on that. Keep that in mind and see what happens next. Maybe we need to adjust our stop strategies and stuff like that. But now that we get another hammer, I would be very tempted to trade that again. So again, this is formed at this support. Let's see how it works. So as I said, once you see the hammer, also I like this volume here. This volume was also pretty nice, but this is kind of perfect because this is a bearish hammer. It's exactly what I'm looking for when I'm trading. I'm trying to trade bullish. So let's see how this relatively, I would say it's relatively almost perfect, right? It's at a solid support and you have some upside, and it's a bearish hammer with a local volume peak. Okay, let's see if it works. Maybe it doesn't work. Okay, now it closed above. So the second candle, as you can see, this is a breakout. Okay, so you want to catch a retest. Normally I would put the limit entry at the high here, and this would be my stop loss, but as you can see, we don't catch it immediately. It just went higher, and let's see what happens. Oops, let's see what happens next. Oh, wow. Let's see. Okay, let's just leave the trade on and see what happens. Oh, that's amazing reaction. That's amazing. Let's just keep it. Okay. So now there are two things. So we had an inverted hammer. Does that invalidate our analysis? Should we cancel it? I personally would, actually, based on my experiences with some other stocks. But here, just for the sake of learning, let's see what happens if we keep the trades on. All right. Oh, stopped out. So that means yes, we have to keep that rule. So I would just Also, it's confirmed by some other tickers. So I would say it's safe. If your thesis, if your argument is invalidated by another thing, you should just cancel your trade immediately for this ticker.
Onglu, sorry to interrupt. We've just got another sort of 5 minutes left.
Okay. We got 5 minutes left. Yeah, so let's see. Maybe we can find another hammer, and we can backtrade. We can take one more trade and see if we can learn. Okay, so honestly, when this comes in, I would say, okay, we finally break down. So yes, actually, this was the beginning of a bearish trend. So that was a bit unfortunate, but that's something we learned. So I would say I personally learned. What did I learn? What I learned is that after such a big trap, I personally would just wait for a little longer to see how it plays out. Because you see, as I said earlier, there were a lot of people try to buy this breakout, and they were immediately wrong. So we see a few hammers, but it seems the hammer is kind of weaker than those traps, those all-time high, those kind of things. That's one thing I learned from this. And another thing, I see another bearish hammer here. So maybe let's. So you said I only have 5 minutes, so maybe I take one more trade. But I'm not going to take this because we've traded twice on hammers at a support. It didn't work. So for this one, I prefer to pass and see what happens. I don't think it's going to work. Maybe we can trade lower. Yes. So we dodge a bullet here. Actually, you see, we traded this guy, we traded this guy. Both are very good. And this guy arguably is at a support area, but we just kind of pass, because it didn't work earlier. All right. So if you put a stop loss here, you would have stopped out, have been stopped out. So, okay. So now if we're looking for bearish trade, let's see if we have any inverted hammer so that we can just take one single trade for to wrap it up. Arguably, this is some kind of hammer, but this is a little too small. For me personally, a hammer has to have like a bigger size. So, well, that's a hammer, but the big body, so I would pass. Actually, this is a very, very strong gap. I wouldn't be bearish anymore, just based on my experience personally. This is inverse head and shoulder, and very, very strong gap, very nice bounce interaction with daily 50. I wouldn't trade bearish anymore, actually. But for the sake of learning, let's try to find a hammer. Oh, this is. No, I'm not going to settle with that because I already said I want a hammer with small body. I'm not going to change my rule here. Just need to be a little patient, right? Okay, this is pretty big, and this is still on a, generally speaking, this is actually an S-curve rotation. I would say it's short-term bullish actually, and the body is not very thin, and you don't have a good volume. So pass. Let's see. Go. Oh, well, a lot of bullish hammers. I'm looking to trade bearish just to demonstrate. Oh, all right. So that's is that earning? No, that wasn't. Okay, that's actually getting interesting. So let's see, gap down and faded, and then coming back. I wish it were a nice hammer so that I can. Oh, here we go. Okay, so actually this is not very ideal because the risk reward is not very good. If you want to trade bearish, you're probably gonna have to do this. But then where's 1R? 1R is way down here. It's way below this support line we just drew, right? So, but why not? Let's just see what happens. So for this one, let's take a look at volume first. Volume is actually not very ideal. So let's keep that in mind. Doesn't mean we have to win. And also, for me personally, if I have such a long hammer and I'm very, very committed, I would actually move the stop tighter, something like that. Otherwise, I don't get good reward down here. And again, I want to take a retest, as I said. So let's see what happens. See if it breaks down. Oh, break down. And we closed below. So now the trade is in. Let me just move it up, and this will be my last trade. Limit, sell, and the stop loss, I still want to tighten. I really hate this, the risk reward. Maybe let me bring it above here and give it a little room up here. Also kind of, there's not a lot of stuff that I can base off. Let me just do this. Let me just do this, and my first target would be down here. Where is the next support level? Oh, it's way down. Okay, so that would be my first target, and for the rest, I would just see how low it can go. Okay, let's see if it works. I will catch a retest. Oh, so we are in. Oops, just move it. See what happens. Ah, no. Okay. So at this time, the risk management should actually kick in, because it actually doesn't work, and you have a very nice consolidation, very small candle, a lot of small candles stacking up, right? So for me, my risk management would just tell me to put my new stop up here to lose less than 1R. But you see, it did work in the beginning. It actually tells us that the signal actually kind of worked, but it just didn't work as extremely the old stop loss. It just didn't work. It just didn't go as far as we want. As I said, we lack the risk reward. If the stop loss could have been that tight, that would have been like 2R, but we don't have a pivot to base off. All right, so now my new stop will be here, and let's see what happens. Oh, maybe we have a chance. Wow, okay, now we finally get stopped out. Honestly, if we are not looking good and we trade back into profitable zone, I would get out for a small profit. That's what I would do. But for the sake of a demonstration, I would just leave it here. And that's something you can learn as well, because you see, if you apply this kind of management, it reduces your loss. Actually, it's a small winner if you allow yourself to just exit when things don't look good, when you already trailed those stop loss. So yeah, that's okay. That's some demonstration. Of course, you need more study, much more than that, because I'd only demonstrated 3 trades. That's definitely not enough in order to study a chart. But I just hope that I, by talking out loud, by trading, by talking out my thought process, that could be helpful to some of you. All right. So I guess that's it for my demonstration.
Great job, Honglu. We've got 5 minutes left for a bit of Q&A, if that's okay.
Mm-hmm. Yeah. Go ahead. What are the questions?
Well, going back to what you were saying at the beginning, like when you're using this strategy, and you said at the beginning, you're very much a swing trader.
Yes.
So with these kind of strategies, have you played around with them much intraday? Have you got involved on any day trading and had any kind of different results, or do you just not go near day trading?
I did day trading before, but I personally think day trading is actually more impacted by gaps and stuff like that. But yes, hammer is actually very important. But you need, from my personal experiences, I think you need to combine hammer with a lot of other stuff. They can, you have a wealth of tools, and you need to know which tool to actually use. You can't just use hammer. But hammer is a very important point, that when you see a very good hammer, very high quality hammer with volume increase and all the stuff, and below at the very strong support, and after retest of a very nice bullish gap, for example, that's the time when you have to be alerted. You have to start looking at it, and then you can use hammer to get some hammer will give you a lot of pivot points, like for example, the lower wick or the higher wick will indicate something. That means something, because the stock reversed there, went all the way up there and then reversed there. So that means something. That would be a pivot point you could base your trade off. Yeah, but day trading, yes, but you have to combine with a lot of things. For swing trading, I think it's relatively more relaxed.
That last trade looks so familiar to so many of my trades, where you almost get this micro consolidation going on, and you just kind of like bouncing around like ping pong, until eventually you're
exactly.
like, I'm either going to get a slight win or I'm going to just like take a little loss, but I can't stay in this anymore. It's killing me.
Yeah, exactly. So actually, I think the trade is already over. Actually, generally speaking, it's better to take your trade take at least a partial when it makes for example, you trade bearish, it's better to just take a partial when it makes a new low. And I said I hate this risk reward, because the risk is this much, but new low is less than 1 hour, and it's kind of not so ideal.
Yeah, exactly.
Yeah, it happens so much. I mean, when you trade revert, it doesn't want to stop you out. You have to be in the trade. I know it sucks.
It really can. It really can. But it does seem like, if you combine the 10 EMA strategy, like Josh was showing at the beginning of the webinar, and then looking at the hammers that are at play within that strategy, you've got a really nice complement, haven't you, of the two?
Yes, exactly. You can definitely combine these two. For example, sometimes when you see a good hammer, you can combine with 10 EMA and ask yourself whether how it interacts with 10 EMA, and whether you would take a trade from here if you're trying the 10 EMA strategy. If both of the two, if both of the strategy indicates that you need to take the trade, then that's like a double confirmation. Yeah, that's a better way to do it.
Yeah, exactly. And sorry, Honglu, one final question would be just around like what you have on your screen now. Do you ever bother with using, say, the RSI or MACD, or do you tend to just keep it as lean as you can?
Yeah, I keep it as lean as I can. I don't use RSI and MACD because I don't know, just personal preference. And because I already have so many lines here, I don't want to add to the complication. Yeah. So
yeah, no, I get it.
Just a personal choice. So for you guys, you have to decide for yourself.
Thanks so much for that. And I love the fact that you started this with the announcement that you ghosted a hedge fund. I've never heard anyone ghost a hedge. I love that. I think it's a t-shirt.
That's a small hedge fund. They don't pay enough, honestly.
I love it.
Anyway.
Thanks again.
Well, thank you so much, Hong Lu. That was really great. Those of you who enjoyed Dr. H's presentation today can find out more on Wealth Wednesdays, which he's the host of. And, as we all know as traders, the candlesticks are very important, and certain candlestick shapes and patterns are more common or popular to trade. And I think the hammer candle is probably one of the most easily identifiable candlesticks out there. It's very easy to recognize on the chart. And as we learned today by doing a back trading session with Dr. H, that you need to back trade hammer candles, that you can't just trade them blindly. You need to practice them. You need to practice them on different names, on different time frames, and to get an understanding of how to manage your trades when you see a hammer candle breakout followed by an inverted hammer, et cetera, et cetera. And so, it really gives a lot of insight, I think, about considering the different types of strategies that you use in different parts of the market, but not only just thinking about your strategies, thinking specifically about the patterns that you see or the type of candlesticks that you see and what you can learn from those candlesticks. If you've back traded a strategy, but you've also back traded specific type of patterns or candlestick breakouts like hammer candles, that's just a more large wealth of information that you're going to be able to put together, as Ben and Dr. H were talking about, when you want to utilize the 10 EMA strategy, the MOMO strategy, or any other strategy. You'll be able to pull back into that tool belt and know all the information that you learned by back trading hammer candles, and to make that part of your repertoire. So we're going to have another presenter coming up shortly after a 10-minute break. Please stay tuned, and we'll see you in approximately 9 or 10 minutes here. Thank you very much, real life traders, for staying with us through this important back trading and strategy webinar. Coming up next, very interesting topic, algorithmic trading. Yes, that's right, ladies and gentlemen. We have a resident algo trader who works with machines, programming trading strategies into a set and forget method. He's going to talk to you a little bit today about how he uses algorithms to assist him with his trading decisions. It's a fantastic topic. The potential is limitless. I personally would love to one day get my trading to a position where I can program algorithms and set it and forget it and let the robots do the talking and make the money for me. Keep in mind, of course, that this entire webinar is being recorded and will be available to all of you that signed up for the webinar and those of you watching it. If you did not sign up in advance and you're happy to be watching this on YouTube now, you can feel free to reach out to us at our support line that we will mention at the end of this program, and you can get a copy of the webinar as well. We'll also be placing a copy of the webinar on your dashboard, so please do consider signing up for an account with reallifetrading.co.uk, and you'll have access to this recording as well as PDF strategies that we discussed during the recording today. Coming up next, we have Doc Martin, our algo lead, and I will go ahead and turn it over to him now.
So I'm Doc Martin. I'm the RLT Algo lead. I'm UK based, which I think gives me a unique perspective that may be helpful for some of the others in the UK. If you're struggling finding brokers, if you want advice on UK specific stuff, then feel free to contact me as well. I grew up near Peterborough, or near Cambridge, Peterborough, UK. I'm a husband and father. My daughter's just about to head off to university. My son's an aspiring geek, just very much like myself, reminds me of me at his age. I am a consultant NHS surgeon. I am on call today. I hope I don't get called. I've traveled the world a lot. I've seen a lot of time, spent a lot of time in different places. Love to travel. And I became interested for my own pension's sake, really, in getting interested first in investments and then in managed investments and then in managing the investments myself. And from there into trading and technical trading and fundamentals. There's so much to it. I've spent a little time trading crypto as well. And yeah, trying to cover the whole remit of everything. What I'm going to talk to you today is my long tail candle strategy. It is essentially just a refinement of one of the first things I learned in RLT, the hammer trading strategy that Dr. H has very nicely demonstrated for you just moments ago. But I'm a little bit more liberal in my definition of hammers. here's the specifics of it. As with that, any strategy, in particular MOMO and hammers, we're trying to find trending stocks. We're trying to find maybe pullbacks in those trending stocks. And so while we might be looking for a real bullish trend, we might want to catch a retracement rather than imagining that from an all-time high it's going to carry on in a bullish direction, which isn't necessarily true. Time frame's important. I backtested. When I say backtested, I mean algo backtested. So I created this whole strategy in my algorithmic system. I recommend Sierra chart. It's what I spend all my time simulating in, and I tested it across all different time frames and found that my favorite was 39-minute candles, which is a variation again on the MOMO strategy, where 78-minute candles are generally used, which gives you 5 per day. With a 39-minute candle, half at 78, you get 10 candles evenly spread throughout the trading day. The whole principle of the hammer candle, I look for nothing more than a 65%, at least a 65% tail on a candle. So that's probably a bit more liberal than some of the hammers that Dr. H might be looking for. It can be up to 35% body. And again, that cutoff was based on backtesting and optimization. If you've seen any of my sessions Thursday evening, 7 p.m. UK time, then you will see the sort of work I've done before on this. Also, I found that you did better if you picked just candles that were at least 1.2 times the normalized average true range of the last 50 candles. And if you found a candle that had an associated mean volume of at least the average of the last 100 candles. In general, I look for a 2-to-1 target, 2-to-1 reward to risk ratio. And but that does depend on the market. And if I'm trading a fade, in other words, if I'm trading against the overall trend of the market, then I'll cut that back to maybe 1-to-1. And before I start trading, I always have a look at fundamentals first. So let's have a look at how I get that set up. And so, as I say, I look at the fundamentals first. So today I figured I would trade 3 stocks because I don't want to slow my system down. Backtrading is more demanding than live trading because you tend to flip through things a lot more quickly and the computers can grind to a halt. And so I've looked at a number of different tickers, and for today I've chosen Tesla, Twitter, and Shopify. And you can see that, in fact, this has been running for some time. I'll start that again. Here we go. In fact, let me explain the whole process to you. So this is Sierra chart. I've got a chart loaded. We've got master charts, and everything else kind of follows. Everything I do to the master chart will be reciprocated here. And I've got a strategy loaded up. Now, I'm not going to go into the details of how algorithmic trading works, but suffice it to say that I have today turned off the automatic trading. And so this is exactly the sort of trading I could leave fully automatic. But for today's purposes, I'm just using it as a signal for me to make my own decisions on manual trades. And backtesting it throughout, I've decided I've loaded up the data for the whole of 2020 across these 3 stocks. Now, why did I choose these 3 stocks? Like I say, I do a bit of fundamental analysis, and what you're looking at now is my fundamental analysis spreadsheet. It's something I've built specifically for backtesting across a specific date, and so I can tell it that I want to be trading from 1st of the 1st, 2020, and it will give me no more recent data than I've entered in this box here. This is available, I should say, on the algorithmic drive, which is a shared drive. Anyone can access it. You can find it at tiny.cc/algo. It has to be a capital A. I'll tell you about that later. I've got a slide on all these details as well. So this is my spreadsheet. You can download it yourself. It requires a plugin, but it's a free one. At the moment, I'm well within my free quota usage, and it gives me, in particular, fundamental data. It's very easy to get stock price data, but fundamental data is a little bit more difficult to get. All I have to do is say, I want to know about Apple, load in the name there, and in my case, I've disabled automatic updating. It might happen just immediately if you download it and use it. For me, I have to press a button and it will immediately update this. And all of this data you maybe just saw has all just changed, and it tells me the fundamental So in other words, the financial reports for this company, annual reports from the 10K filings for Apple. Now I'm showing you that just to show you, we're actually trading Tesla today. So let's go back to that. And I decided that the fundamentals of Tesla, Twitter, and Shopify were just fine for me. On each page of the fundamentals, on each sheet of the fundamental spreadsheet, there is a sort of second part to it, which is graphs. This is Tesla, and you can see that it had constantly increasing revenue from 2015 through to 2019. And for the first time ever, it turned positive in terms of cash flow for owners, which is the sort of leftover monies that they're starting to accumulate that might lead to dividends and to people being more enthusiastic about actually buying into the company with stocks and shares. So equally speaking, now I'm no expert on fundamental data. I would defer that to Dean, and he and I are going to run a session on this sometime soon. So hopefully you can look forward to that, and we'll explain how to interpret this more extensively. We only have so much time though, so let's go back to the chart. Take my word for it. Anyone want to tell me a month that we could start trading from? In fact, I don't want to make this seem like something I've teed up already. If I can load up the chart, the chat. It's good to see everybody hanging around throughout the whole of this. We've still got a few attendees. July, thank you, Tony. So what we will do now is load up and do a replay. So we press replay, we select all charts, and we select a date. So you've told me to start from July. Thank you very much. And this will reset the data. And what I want to do is I want to open a couple of windows for me to monitor. I want to open an alert manager, which is this bit down here. So every time my algo strategy detects a promising trade, it will ping a little alert here. It can feed it to me on my Twitter feed if I really want it to as well. And I also want to very quickly load up the trade activity log and make sure that all of the trade activity has been cleared, so that I know that what I'm looking at in the results is truly the results today, not from yesterday. And then I just click play. I've already clicked play, and what you'll see is we are now looking at the 1st of July at the right-hand edge of our chart. What I also want to do, just to make this easy, I'm tabbing through here until I get to the move on to next bar button, and then I can move this off here so you can actually see what I'm doing. Now just press return, and it will give me a new candle, the first candle in July. You can see that we've just missed out on a few signals. This is Tesla. I can flip through the charts to Twitter or Shopify. Twitter's looking a little bit bearish. I also bear in mind the overall market conditions. I can look at how the SPY's been doing, going sideways really. The Q's a little bit more bullish. Yeah, we had that dip. I think I know offhand. So you've taken me beyond the bit I know where we might be trading bearish through March into July, and expecting continued bullish trend, looking at the Qs, looking at the fundamentals of these stocks. So we're mainly looking for bullish trend trades. Let's go step by step until we get one of my signals from the long tail candle strategy. So the candle, straight away. This is good. I've done this a couple of times, I should say, not on these tickers, but I've made a recording from Thursday evening, which is available for free. Even if you're not an RLT member, the Algo Clinic is open access. You'll find it on our YouTube channel. You can load up the Algo Clinic and see what we did there with 3 different tickers. But I have never traded these 3 stocks from July onwards. So we have a signal. It's a generally very bullish trend. We're looking for a longer trade, probably bullish. What I said about not entering at an all-time high, we're not far off, so it's not an ideal, but you know what? I know this strategy works because I back tested it. And so let's be brave and let's take a trade regardless. So first of all, I'm going to mark out the trade. And so just below the bottom of the candle is our stop. Just above the bottom, the top of our candle is our entry. And using the scroll wheel to move so I can see, I'm looking for a 2-to-1 risk reward about there. And it says that we are going to be, our stop is $3.14 from our entry. So I can now calculate, let's say we're taking a risk, an R of $100, divide that by 314. So we want to be buying 32 shares, let's say. So I just type in how many shares I want here, and I place a stop entry, a buy stop to open order. We set our stop and we set our take profit. Looks good. And we've now actioned this alert. So I'm going to clear it from my alert manager. And we're going to see how we do. Let's move on. So we are not into the trade yet because we have not hit our entry. It's a stop order, not a limit order. Don't get muddled up and place the wrong one. You could argue that that's another little hammer candle, and maybe we should move our entry a little bit lower, looking for a bit more, capture a lower price. What I was saying about entering at an all-time high, maybe not advisable. I should say these are the MOMO EMAs, the 8 EMA and the 21 EMA that I've got on my chart, and they're not part of my strategy. I just use them to sort of visualize the whole market, but I like to have them. I could also, you were hearing about the 10 EMA strategy. Well, do you know what? It's only a minor variation on that strategy to use the 8 EMA and trade exactly the same sort of strategy. So I could look for the first bear candle to close above the 8 EMA and look for a trade there. Could have got a nice little trade there. So all of this information is available to me. I can see that also I'm quite high on the RSI. So maybe inadvisable, but do you know what? It's, my trade plan doesn't care. So let's see how it goes. We've got another signal. Now, this is certainly an opportunity for us to revise. Like I say, I'm liking getting an entry a little bit lower. I'm not going to change the number of shares I'm going to buy because it's a similar size candle, so a similar size stop offset, but I am going to adjust my entry and I'm going to adjust my stop. We've also got a new, this is the new signal just here that we're looking at. This is monitoring the other two charts for us. So as we flip through this, we're effectively trading 3 for the price of 1. And we're going to step through a candle by candle. We still haven't entered yet. Sure, we might sooner or later get a trade. Oh, now we have. So we have entered, we have a position of 32 shares and we're just a fraction down on our entry. So we entered here and we've now dipped down a little bit. Let's see how that goes. Bit of an indecision, inside candle. And boom, see that? Enormous gap up. And so we have taken our profits and we are straight away $600 in profit. So this illustrates a really good point that anyone new to trading needs to know. If you get a gap, you can go far beyond your stops, and that includes your stop loss. And so where we've set a stop loss of $100, you need to be aware that if it gaps down, and if I was really paying attention to every aspect of my trading, I'd have recognized that I was just at the end, the final of the last of the 10 candles, and maybe we'd be gapping in some way. It gapped in our favor this time, which was great. We're up 6R of profit already. But we could have been down, and where we're trying to limit our loss to 1R, it could easily have been, say, 2 or 3R that it gapped down. I mean, it could have been 10R, but it's unlikely. So these are risks that you need to be aware of above and beyond the risks that we often talk about. So, but very happy with that, and we will clear our chart. We will count that as a trade done, and we're already 6R up. Can't be too bad. Let's carry on. And new candle, please. New candle, please. Still looking pretty bullish. Now it's easy to earn money on Tesla, just in case anybody's thinking, oh, well, bound to be getting money on Tesla. So hopefully we'll get some signals on some of the other charts as well. But here's another candle. That's a beautiful, really tight candle. Now that I've accidentally skipped one candle too far on, and so arguably we should have entered at this point. But the tighter the candle, the more, the smaller the price movement you need to actually capture a decent profit. And so, but of course, the smaller the price movement you need downwards to lose your stop. And there's a big gap here. Now, on anything else, I would say, after a big gap, be afraid of entering too enthusiastically, because it might retrace, might well, and close the gap again. But this is Tesla, and experience shows that Tesla and maybe Amazon and Apple and Google, some of these big trending companies, especially at the prime of their trends, don't retrace nearly so much. And so let's just put in our same markers again. And admittedly, I'm a bit late to the party, but let's see what we can make of it. We're after a 2-to-1 risk reward. I'm not going to chase, as I said earlier in the chat, I'm not going to chase an entry that I've missed. What I'm going to look for is a retracement and another opportunity to catch this. And I'm probably going to miss it because I was a fool and I pressed the button twice. In real life, I might have seen that signal and I'd have had 39 minutes to think about it before I could have accidentally moved on to the other candle. But let's place. So instead of a stop limit, because the price has already passed this, I'm going to put in a buy limit. Instead of a buy stop, I'm going to put in a buy limit entry. And let's cancel that because I haven't done my maths yet, actually. So we're looking $3.72. So we want a $100 risk. Our stop is a loss of $3.72 per share. So we want 27 shares in order to make our stop a $100 loss. And we are after a buy limit. We are not prepared to pay more than we were going to pay in the first place if it had been a buy stop. We'll adjust that and we'll adjust that. And that should be good. So there's a good chance it's gone without us, but let's see what we can make of it. Is it going to retrace? Oh, interesting. Okay. So we've gone straight up to the point at which we would have actually successfully closed our trade. Well, maybe nearly. And now we've actually got the opposite of our entry signal. We have a bearish signal. I'm just going to raise that drawing so you can see more clearly. So this is telling us to sell. Now, depending on the settings of the strategy, if we were already in this trade, it would ignore that if we hadn't yet exited. But do you know what? You can place both bearish trades and bullish trades on the same ticker at the same time. And why don't we take a chance? So again, our stop would be about, okay, let's move that out of the way just while I set this new trade up. So our stop would be about there, our entry would be about there, and this is a fade, so I'm looking for 1-to-1 only. I'm not looking for anything more than a little retracement. And let's set that up. Josh, if you're still there, do tell me how I'm doing for time, would you?
You've got about 5 minutes.
Just fine. Yep, exactly, as Ben mentioned. You got 5 minutes
Thank
on
you
presentation, followed by Q&A.
Excellent. So 5 more minutes. We'll get maybe another trade or two in. So what am I after? I'm after a sell stop. In fact, I need to do my maths first, don't I? So it's a $5 risk. That's easy. $100 divided by 5. We need 20 shares. And let's do a sell stop. There you go. So it gets a bit crowded on the chart, but this one needs to be lined up on the there, and which one is it? This one, yeah. Needs to be lined up to take our profits there. The limit order is the take profits. Let's see how that goes. I doubt we're going to win both of these trades. We're probably not going to enter one. We might, I'm thinking we might even lose this
fade, but you know what? Let's see how we do. So we're not entering the fade. We might go past both of them without entering either. But step by step, let's see. We've got another signal telling us to maybe sell. And we've got a signal on Shopify. Now, I don't want to get too complicated, but I did promise you to look at some of the other charts. Now this is what I would call a transient signal. Oh, no, it is that. If there's a definite arrow on the chart, that's a definite trade recommendation. So let's just do that. It looks like a fade to me, so let's keep it 1-to-1. And we have a risk of wow, Shopify are expensive, aren't they? $25. Let's just sell 3 of them, not 320. So let's take a short, sell stop just there. You can see that the price is constantly trading. You know, as I haven't paused anything. This is going at 1 times speed, so it's like we're at that time on the market. I think that should do us. Let's see how that progresses. So 1 more candle, please. We are entered into the trade, and we've already seen a sort of a bit of enthusiasm heading in the right direction. I'm always keen when we're fading. Now, I haven't mentioned our MOMO signal is just crossing here. This might be turning to a MOMO signal as well, which makes me even more enthusiastic. Let's see what Tesla's done. So we are in and we are bullish. And I think in the overall scenario, I'm making a bit of a rush decision because I want to keep things simple and show you what's going on, but let's cancel that other trade. So that's our exit, which I moved up, didn't I? It would have been a little bit lower. This is trading this candle. So actually, this is the one we want to cancel. Here we go. So we're back into the original trade, the bullish trade. I've cancelled the other one because I've decided it's heading in the other direction. Couple more candles, and then we will wrap up and we'll take some questions. There you go. Another successful trade. Profit of $500. Which is more than I'd done on my maths, but there we go. And we are still in this trade. Ooh, just on Tesla, and I haven't shown you any of my stop management. I normally aim to be sort of 2 stops behind. So where I see a level of support, like here, I look for the level of support before it. And so we might say about here. And so I've just reduced my risk, advancing my stop a little bit. What I'd like to do actually now is advance my take profits, because this is looking like it's trending. The gap between the EMAs is getting more and more. It's getting more and more bullish. So let's be a little bit more adventurous. Let's see if we can get this trade to run a bit. And it has run a bit. We are still in. No, I think I've confused things and we're now gone -20, but hopefully you can see what the intent was with that. What I'm going to do is flatten all positions. I think we just exited and took a 134 profit again, in fact. So let's flatten our positions there. Let's have a look back on, we'd already closed that position. The beauty of the algo trading, one of the other beauties of the algo trading, is that it logs everything for you. Let's see how we did. I think we did phenomenally, and don't take this as typical, but in the space of a week of trading and $100 risk, we were simulating essentially a $10,000 account. We've made in 1 week $1,200. Now that is not to be expected. I'll take it, but it's not normally quite so enthusiastic. Do watch the other recording, which, like I say, is on the Algo channel playlist. And you'll see what I think is also a very realistic representation of this strategy. Do tune in, Algo Clinic, Thursdays evening, 7 p.m. look at the Algo Shorts channel, has got little short clips teaching you how to do algo trading, how to use Sierra Chart in particular. The shared drive's got a lot of resources, including that fundamentals website. Like I say, the previous recording, oh, in fact, I forgot I made a shortcut link. So go to tinycc/algo backtrading. Capitalization is important to get that to work. Give me a shout if you have got any questions. Obviously, it gets pretty complicated. I suspect we haven't got too many beginners here, but if we have, and you want to have some basic instruction to get you up to speed with understanding any of this, feel free to drop me a line. Or if you're interested in mentorships, you're interested in algo, I'm always keen to talk to people, find strategies of their own, try and code them, explore things with them. Basically, just like to explore the trading options. Shall I hand that back to you, Josh?
Really great stuff, Martin. Thank you so much for sharing this with us. Perhaps we maybe do a little short Q&A with you, if that's all right.
Yeah, of course, absolutely.
It was really interesting for me to see particularly how organized the algorithmic trading can be, including the logging, the signaling. There's really so much of it that just, and as you mentioned, you placed it on manual mode. I'm assuming that including all those signals and alerts, we can completely automate the entire process if we wanted to, and let the algorithm trade for the entire week, acting on these signals using its own programming. Is that true?
Absolutely, and this is my equity curve for that same strategy, some variation of it. I've changed it so many times I've lost track, but this is trading across all of 2020, and don't look at this and think that you will replicate this. This suggests that you multiply your account by 6 in the space of a year. That is, I'll be the first to say, complete nonsense. I'm not rich. I'm still working on it. I'm working on just finding an algo strategy that I would want to put much of my money in. I do have live strategies, but it shows promise. And if this is the foundation of technical trading, we should be able to replicate that with algorithmic code. And it is fairly simple. Anyone who's done any Excel coding, the basis of most of the Sierra Chart algorithmic coding is basically Excel code formulas. So yeah. And if I had these settings turned on, then I could have just played that through and it would have taken all the trades itself. Might not have, I don't know. I think when I do it semi-automatically, as I'm saying, I probably do better, and I certainly trail trades better. So I'm not 100% algo trader by any means. In fact, most of my trading is non-algo. But even the algo trading I do, I don't really want to set it going fully automatic. It's more, for me, it's about exploring the trading opportunities.
Super interesting. Yeah. And, having that flexibility to automate it to the highest level or anywhere in between using this type of programming, it just gives you limitless potential. You can use the algorithm to signal you and then apply some of the other strategies we talked about today, or as you mentioned during your presentation, you keep EMAs on your chart that could clue you into momentum related strategies as well. And you have the ability to treat the algorithm as a signal assist, as you mentioned, all the way to fully automating it and anywhere in between. You can even use it, as you've shown, on multiple tickers at the same time, really, giving you more eyes and ears on the market than you would be able to do so independently. It's a really fantastic tool.
Yeah, and I see the question, Tony. I'll answer that in a moment. For me, I think what it really does well in the tests I've done is find the entry point. And then the semi-automatic really makes me perform better in terms of following it, trailing my stops, advancing my stops, and following the trend. Now, Tony, you're asking about, that was me manually entering and exiting the trade on a simulation account. So the simulation accounts, basically, Sierra Chart has data feeds, and so it loads all the market data up from its data feeds, and then it will simulate accounts for you. It will also connect to, in particular, probably the most accessible broker. It will connect to interactive brokers. And so you can have a paper account on Interactive Brokers or a live account, and it will send all those automatically. Or what I click here and what I click on the chart, it will send that to Interactive Brokers as well. So I can connect my broker and do exactly as I just did here in Sierra Chart and have the trades done for me. There are a number of different brokers as well. If you use Interactive Brokers, then you're good to go. I think I needed to send them some form I needed to fill out to get them connected to Sierra Chart in the first place. But there's all sorts of data and trade settings just here. I've also got accounts with several of these others. You can, in theory, through BitMEX, you could trade crypto, and you can trade Forex. And so I've experimented with a lot of these, but shares are the easiest to get going. And we've even experimented with possible connections to Binance, for example, and things like that.
Oh, super interesting. Wow, it really shows the potential for algorithm, the fact that you can use it on a number of different instruments and asset classes. When you were developing this strategy, specifically looking for these long tails, what clued you in that the length of the wick or the length of the tail on a certain candle might be a focus point for developing a strategy?
Well, in fact, what I do is with every trade I have within this, I code a tag that goes on the trade. And so here you go, you can see the code that I've got that attaches to, and it tells me the conditions at the time that trade was taken. And so what I've done is I've simulated backtesting through a number of different tickers and made all the trades I can possibly make and tagged them with all of the what I call the demographics. So in other words, the conditions of everything at the time that trade was entered. And then I can export that from the trade results. And so it's literally this trade activity data that gets exported. In fact, no, it's these trades data that gets exported. And then within Excel, with my medical background, I've done statistics before, and I've done statistical analyses to correlate the success rate of each of these trades versus each of these different sort of demographics or predictors, if you like. So, and based on that, I found cutoffs that seem to be optimal. And so the wick percentage, more than 65%. I've looked at several others. RSI was surprisingly irrelevant. I thought that would be one of the best predictors. If it's oversold, overbought, I thought, yeah, that will be a great predictor for me. But actually, don't take this too literally. This is all going to be specific to my context in the stocks I'm trading. Don't think that RSI is completely irrelevant, but certainly in the conditions I'm trading on the tickers I've been looking at, I haven't found it to be helpfully predictive. Average true range of the candle that we are looking at as a signal and the volume have got, and these are small refinements. They don't make radical differences. And what I've shown you today was fairly phenomenal. That's not typical results. If we could go back to 2020 and trade it, that would be great. The market at the moment isn't looking like the market in 2020. So equally speaking, this strategy now, I'll guarantee it will not perform like I'm doing now, but that's where the algo is all about exploring, finding strategies that will for different markets, for different environments, for different tickers. That's what it's all about.
Doc, we have another question here from one of the viewers asking about the EMAs on your chart, the 8 and 21 EMAs, and why did you choose them and what do you use them for?
It's because I put them on because I wanted to do exactly as I was describing a moment ago. I wanted to look at whether the MOMO signal, for example, was predictive in addition to the hammer signal. And actually, of all of the different predictors, MOMO wasn't that predictive. But I do find it, I do like it on my charts. So it's to do with the semi-auto part. It's not part of the strategy in the algo coding. But I still like to see MOMO.
Great stuff. Yeah, I think it helps additionally exemplify that, when you're trading in the markets, you're not required, and there's no one looking over your shoulder telling you that you can only trade one strategy or you can only look at the conditions of one strategy. That's the beauty of using technical advantage and having machines assist you, is that you can have an algorithmic strategy here that is coupled with other indicators that may be more easily readable manually, and you can combine those and think about that information. As you talked about in your presentation, you were making determinations about entering trades off of the signals based on trends as well. And you were able to see the change in the EMAs. For example, you mentioned the distance between the EMAs was growing, giving you an indication that there may be some bullishness in that specific trade that you showed. And
Absolutely.
That was correct. And so really, it's another tool. We have a question here from Pat about aftermarket data.
Yeah, just finishing off what you were saying, there are lots of things that I was looking at that I didn't mention today. And I have in that recording, if you found this session interesting, then do have a look at the recording as well, because I covered different stuff, spoken a bit about gaps, spoken about consolidation periods, and the overall trend and the expansion of the gap between the EMAs and things like that. Do I use aftermarket? Out of hours data is, I assume what you mean, Pat. You set up what you want on your charts. And so I set my session times within Sierra Chart. You're still seeing my screen, aren't you?
Yes, we are, yeah.
Yeah. And actually, this is one of the pitfalls of Sierra Chart. You have to be really careful. When I first started using Sierra Chart, I set market hours, and I didn't realize that I had a computer that was set to UK time, and I had I'd set it to 9:30 and 4 o'clock. And it was trying to do that in UK time, and it had all the out of hours data. And so I was trading sort of out of hours periods, and it was giving me great results, but not something you could actually do. And so I now have a computer that is set to New York time, to Eastern time, isn't it? So everything I do is based around US time now. But I don't use out of hours data. This chart is, I could for sure, and I could build it into the strategy. But this particular strategy and everything I've shown you today is based on just standard market hours.
Well, thank you so much. Really great presentation, super insightful, super niche, a really fantastic potential. Algorithmic trading is what institutions use. It's becoming more and more prevalent, more and more popular amongst the retail community. And it's reached a level, as we've seen here with Doc Martin talking, of accessibility, where you can learn to do this too. You're not at a disadvantage from the institution anymore. So if you want to learn more about algorithmic trading, please do check out our Algo Clinic on Thursdays. That is the room that we offer on that evening, hosted by Doc Martin. And as he mentioned in his presentation, there is a plethora of resources available that he has compiled to help you with algorithmic trading. And you can reach out to him directly, as he is our resident algo expert.
Two more things I'd say. Also, algo is more affordable than there is a subscription with Sierra Chart, but it's something like $20-25 a month or something like that. That's why I use Sierra Chart. Well, the other reason I use Sierra Chart is because it's so simple. You don't have to be a computer programmer to use this.
Yeah, really, really great. Thank you so much. Thank you everyone for being here for this webinar. Just going to have a few more slides here to talk about some final matters. Once again, I'd like to thank Audacity Capital, our initial partnership sponsor. As a reminder, Audacity Capital is a world-renowned prop firm with a reputation for funding and backing profitable traders. If you have talent and know-how, if you're interested in trading Forex using someone else's money, they can provide you with the necessary funding. If you're a successful trader, an ambitious trader, you have a proven strategy, and you're ready to go to the next level, consider checking out the Funded Trader program at Audacity Capital. There's a 10% off link being added into the chat right now, and we'll include that as well in the wrap-up of the slides. If you're selected for their program, Audacity Capital can provide you a fully funded trading account starting at $15,000 to begin trading Forex with. Profits are split 50-50, and you have no liability for losses. They offer a trading support network and will double the size of your account every time you reach a 10% target. You need to have the ability to keep drawdowns under 10%. Manage leverage consistently, and demonstrate consistent profitability with a good risk-reward management. In order to join, there is an administration fee of £199 and a monthly platform fee of £99 to help provide tight spreads through an institutional liquidity provider. And if you're looking to take your trading to the next level, please consider checking out Audacity Capital, www.audacitycapital.co.uk. Thank you also to 24/7 Wall Street. That's 247wallstreet.com, the popular US-based LLC that runs a financial news and opinion company with content delivered over the internet. Their articles are republished by some of the largest news sites and portals, including MSN MarketWatch, USA Today, AOL, newspaper and broadcast sites all across America and the world. They publish over 30 articles per day with readers throughout North America, Asia, the Middle East, and Africa. Make www.247wallstreet, that's 247wallst.com, your first stop when researching the day's investing news and beyond. Let's take a little bit of a moment here to talk about our RLT community. I hope that you found this webinar helpful and insightful. And if you're interested in learning more about how to become an RLT member, please keep in mind that we offer a tremendous amount of free community resources. Not only can you see here an example of our Slack channel, of which you will find interaction and a trading support network of both administrators, mentors, and other students and peers where you can share analysis, including some wonderful back trading on the 10 EMA strategy. But also we offer a tremendous amount of free resources, a free trading journal, self-study curriculum from beginner to advanced, printable workbooks so that you can study these courses just like university level courses, including reviews, exams, and certificates of completion for each of the curriculum. We offer small group mentorship, one-on-one coaching, and the fantastic advantages of a global member support network. There's fantastic free resources, as I've mentioned, that are available to anyone who joins Real Life Trading UK. You can see here, for example, we offer beginner trading, intermediate trading, futures trading, psychology of trading, intro to swing trading, day trading techniques, advanced trading, information for kids and young investors, back trading, gap and go strategies, Forex and futures, and much, much more. Everything that you're seeing on this screen, hours and hours and hours of curriculum and education for free. All it requires of you is to become a member of Real Life Trading. Everything from fundamental analysis, learning topics on stocks and options trading, algo trading, Forex trading, and even investing and planning for retirement and the long term. All that's available to you, beginner through advanced curriculum. So how do you join RLT UK EU if you're interested? Well, we offer a number of packages, everything from a pay by the month membership all the way up to yearly annual memberships and a number of in between at 3 and 6 months. With each of these memberships, you're getting access to our trading rooms that we offer each day, our Slack global community that includes access to all of the RLT members around the world, as well as administrators and mentors. And if you sign up for a 6-month membership or larger, our yearly membership, you will receive complimentary one-on-one coaching sessions and consultations to help set you up to achieve your goals and reach your trading dream. Please do check us out at www.reallifetrading.co.uk/subscription for more information. And we do offer a 14-day free trial on any of our plans. So please take advantage of that. It's a no-risk offer, and you have the ability to check out the wonderful resources of the Real Life Trading community. We're having some upcoming events. Thank you so much for being here for this webinar, and we will have future webinars on similar and other topics. For the month of March coming up in approximately 2 weeks, to align with Women's History Month, we will be featuring a specific focus on women in finance, female traders, as well as other special monthly challenges and guest contributors. So if you're watching this video on YouTube, on Zoom, or some other platform, and you're a female trader considering taking the next step to learn about how to be a full-time or part-time trader, please do reach out to us at reallifetrading.co.uk and reach out to one of our team members to talk about the role that you might play in our upcoming Women's Month. For the entire month of March, we'll be having that focus. In April, we'll be offering a free week. Yes, that's right. For an entire full week, we will showcase all of our daily premium live rooms, all of our weekly content, and provide global access to our community for free. All you need to do is register at reallifetrading.co.uk/free-week. And that'll give you the opportunity to sign up for the free week, April 25th through 29th. Get full access to all of our offerings with a risk-free trial, attend each and every one of our live and recorded content rooms, and you'll be able to see the wonderful community support provided through our global support network through Slack and Discord as well, and begin your journey on learning to become a profitable, consistent trader by accessing our fantastic curriculum. And in regards to the recording of today's webinar, yes, this webinar has been recorded, and all of the information and all of the content that we produce at Real Life Trading is always recorded and available for you to watch over and over again so that you can solidify the concepts, so that you can write down questions and contact the producer of that video and all the steps in between. A PDF copy of today's webinar slides will be sent out to all the registered attendees so that you can review them alongside the video and have access to these written strategies. We're going to place a recording of today's webinar as a free icon on your RLT dashboard, so please do consider creating an account at reallifetrading.co.uk/subscription to gain access to all that wonderful free curriculum as well as a free recording of today's webinar. And we will also include a recording of today's webinar posted to our main UK YouTube channel as well as our USA Real Life Trading YouTube channel. Please do check us out, reallifetrading.co.uk/subscription. for more access and information. And as mentioned, we do have a 14-day free trial available for any of our plans. Finally, those of you who have stuck with us through the entire length of the webinar, we want to offer you this special subscription discount. Using the code webinar20, you will get 20% off any of our subscription packages, and you will receive a free 30-minute coaching session of your choice with any of our panelists today. That's over a £200 value that's being offered to you with this subscription discount. And we're happy to honor that through the end of Women's Month at the end of March. Thank you so much for being here. And that's why we wanted to create the special discount for webinar attendees. Finally, if you have any additional questions, we'll be happy to answer them now. Or you may reach out to us at support-uk@reallifetrading.com. Of course, if you join Real Life Trading, you'll have access to Slack and Discord, where you can reach out to any of our panelists today, as well as our other administrators and mentors from the US, India, Denmark, the UK and Europe, and beyond, even Australia as well. Real Life Trading is a global organization with a global support network. And as always, as we always say here at Real Life Trading, love life, live life, and trade it. Thank you very much for tuning into this webinar. Thank you for being a part of Real Life Trading if you already are. Please do check out Real Life Trading membership if you are not, using this wonderful code webinar20. And as always, this is education and not financial advice. I hope that these strategies and this back trading discussion was helpful and educational for you and helps you take the next step in your trading journey to becoming a consistent and profitable trader. Thank you to all of our attendees. Thank you to our panelists. And we hope to see you in the Slack channels and the Discord of the Real Life Trading community soon.